Hey everybody, it's Nikos here. Can you all hear me? Can you see also my pretty chat? Okay, great. So is everybody ready to start? Wonderful. Okay, great. Let's start then. So first of all, welcome to our charity event. Again, it's for 100% great course. We are giving everything you send over to the kids to support the kids, especially over Christmas. Now it's, I guess, very important. Uh, um, it shouldn't be only important over Christmas, but this is of course the time where we think about it more. Um, and yeah, thank you very much for your donations. Many of you have already uh, sent money over, which is great, really great. Of course, would like to see more people donating actually than I've seen so far, but okay, I'll leave it up to you, of course. Um, what we are going to do today is pretty much the Spartan basic system. Especially this is mostly like, let's say, new traders or traders that are new to the Spartan system. Of course, it's a great repetition for everybody else as well. Sometimes when we get good at something or we have more experience, we forget sometimes really the basic or the most, let's say, basic parts or the important parts of the basic parts, let's say. Um, and then a repetition is always good. Um, Also, what we are going to do is we are splitting this into three parts today. I'll try to make it smooth and not too much, and I also try to make it not too long, but with two breaks in between we need for sure, just to be able to reset and you know clean the head a little bit, the mind, and then we continue. Okay, so first, before we start again, is anybody here new to trading? Like very, very new to it, to Forex especially? Most people are not, a few of them, okay? 2 months is as good as new, for sure. Okay, okay, great. And anybody here that is experienced but has never traded the Spartan system, for instance, or the Spartan strategies? I know a little bit, not traded the Spartan system. Okay, yeah, so we have a few guys. That's fine. So you don't have to get nervous or something. It's all okay. Um, yeah, you mentioned it already. Price action, like the Spartan system, is also a lot about price action. Um, Never been trading a system. Okay. Yeah, for sure it does, George. I'm doing it for many, many years. Okay, guys. Yeah, in case you cannot make it live or you have to go somewhere later on, it's okay. We are recording this anyway, and I will upload it later on, and you will get the link. Yeah. Live is always a little bit different, but no worries. Um, it's recorded, as I said, and you can just watch it, or you can watch parts of it and then relax and watch later on a little bit more. Okay, okay. Great. So let's start. Let me just see if I have my prepared some the topics here. Okay, just one sec. There we go. You probably saw that before in the video. I'll just quickly go over it again so you have an idea about the schedule today. First of all, when I start explaining things, especially for the new guys, let me first explain, and when I'm finished with something, then write down the questions. Okay, this way I can really focus on the charts and on the topics, and I don't have to look at the chat box all the time. Okay, better for everybody. And when I'm ready, I will tell you, I will ask you, hey guys, any questions? If you have the questions, we continue. We go step by step. You don't have to learn everything today. You just need some important parts to understand that will help you long term becoming, hopefully, a professional, or at least, good to great trader. Yeah? So trading professionally, the Spartan trading system. We divide that in two parts. So we will focus mostly on the technical part today, because the mental part is not something you can do in a day, but you can start preparing yourself, and you can do some exercises to become mentally very, very strong for trading. And I will show you, and Jeff also. Jeff, are you here? Jeff should be here. I saw him before. Okay, there we go. Okay. We will cover this, because if you are not mentally strong for trading, it doesn't matter what you know technically. It doesn't matter how many systems you know in theory, or how much experience you have technically, or how many books and videos you have seen over the last months or years. It doesn't matter. If the mental part is not strong, you will never, or it will be very, very difficult to get long-term good or great results in trading. Okay, so I'll tell you up front, so you know how important it is to have a strong mindset when it comes to trading. And we will cover the basics here as well. Part 1. So any questions before I continue? Any questions here? Anything you didn't understand? Okay, great. So part 1. Learning to see first. What I mean by that, understanding the charts is the first point A, let's say. Okay. When we say you have to learn to see first, it means that when you look at a chart, because this is a technical system, the Spartan system is a technical system when it comes to looking for setups. Okay, like when we are looking for trade, we need to be able to identify setups on the charts. So if you don't see, if you're blind kind of when it comes to charts, then it's very hard to make profits, and we don't want this. We want exactly the opposite thing, right? We want to make profits. So you need to understand the charts first. What do they do? How do they move? Market behavior. Yeah, what is going on? Why we don't really care too much why things happen. We just need to see when they happen and what we have to do when things happen on the chart. Okay? And of course, the difference between fast and slow moving markets. In a fast market, you behave differently, and in a slow market, we behave differently. It's not the same. But when you get this, and you understand how to, distinguish between fast and slow moving markets, and you see, other little things I will explain later on, then trading becomes much easier, because you can make decisions faster, better, and easier. And it will create confidence. If you have confidence, then the mental part, yeah, the mindset is getting strong. So we need to understand what's going on. We need to see and understand before we can trade. Okay? Part two, getting closer means like when we're getting good at this part here, we need to identify trends and ranges. We need to be able to see a range, and we need to be able to identify a trend on the chart. The second part is finding major support and resistance levels. Like there's so many tools one can use to look for support and resistance, right? There's so many indicators and EAs and I don't know what. And I have spent years buying books, studying stuff, traveling here and there, doing seminars, webinars, all kind of things. I mean, webinars not that much because back then there was not much really going on. But you can really read for years and years, book after book, and having fun, like really great bed night, stories and everything. But it's just too much theory. Okay, too much things you could use. And it's really simple and easy how to look for support and resistance levels without going crazy. Okay? I show you how we do this. And market volatility means that we need price to actually move. It has to go somewhere, either up or down. It has to be volatile. And this market volatility will help us deciding if it's worth trading or not. Okay? It has nothing to do with, the system you are using or the strategy you want to follow. Nothing. If you cannot identify or not, if you don't know how to identify or look at volatility correctly, it doesn't matter what you do, it won't work, not for long. Yeah? So, of course, yeah, we always need to practice, for sure. But you need to start, or you want to start understanding stuff first, so you practice something that actually makes sense. Yeah, like when I started, I practiced a lot, but a lot of what I was practicing was absolutely worthless. Absolutely. Okay, not all of it, some of it. Anybody from Germany here? Does it matter, Stefan? It doesn't matter where we are from, right, guys? Ich war übrigens in Dortmund, bin in Dortmund groß geworden. Ralph from Nigeria, there we go. Austria, there we go. Okay, there we go. Bayern. Yeah, Bayern is almost Germany. Almost. Am I right? Okay, guys, great. Again, I can do a little bit, English, a little bit, as you know, German, Greek, but that's it. So all the other countries you're mentioning here, it's probably great, but yeah, unfortunately, I cannot, talk in all those languages. Okay, let's continue. I'm happy that we are look at all those people, all those countries here. It's great, yeah. So the internet is our friend, right, guys? Australia, no. No, Mike. No worries. I just remember that one. Yeah, guys, it's all recorded. Let's continue. So again, let's go back to the important stuff now. um, what did we say? You know, when we start talking about other things, I always lose my train here of thoughts. Volatility. Okay, we need to remember if it's worth trading. So no matter where you come from, the charts are looking the same for everybody. So you don't need to learn a specific language to look at the charts. That's the great part. Okay. Part 3, looking for trading setups. So after getting closer and understanding all those things, at least the basics, okay, we want to look for setups. According to the Spartan system, we are going to do a top-down approach. That means we are looking on the charts on higher time frames, and for some really obvious reasons, which I will explain, we are going down to lower time frames to look for setups. Okay? And if we have done that, we are going to look for what we like to call early setups. 1 to 3 early setups. And this, if we get good at this, we have something that we can, or you get something that you can use immediately, right away. But applying, of course, great money management rules. I don't use the word good. Good is the enemy of great, as you know. We need great money management, meaning we need to protect our account first before we even think about making money. Okay? Now, if this is done in about 7 hours from now, no, I'm just kidding. But you need, of course, to study a little bit on your own at some point. We go to the mental part, and here I say dealing wisely with fears. Now, you can put everything into words, right? Fear, greed, discipline, what else? All those fancy words. But they don't necessarily mean the same thing to all of us. Okay? My fears are different than yours. The same with greed. We often misunderstand greed. Like greed is something bad. Not really. We have the bad greed and the good greed. So I will explain the difference. Yeah, you have to know what you are dealing with and what you really want. Then things start making sense. Okay? Yeah, exactly. Positive and negative greed. Yeah, not Greek. Yeah, of course there are also positive and negative Greeks, but also probably Germans. or was that a typo? Probably, right? So, how do we do this? We have to remember who is in charge. When we trade, I will explain. So how do we manage those, let's say, issues we're having? A great positive thinking exercise, which is really simple to explain but difficult to do. Try to do it. I'll tell you up front. This is something you want to practice. It's amazing. 5 ways to remove all your mental trading obstacles. This is Jeff. This is his way of doing things. Okay? And we start right away. If we don't have any other questions now that I started explaining, if we are done with this and there's no other question, I will just open up the chart and we get into it right away. So any questions? Anything you need to know? It's all good? Okay. Let's start then. There we go. Can we all see the charts? Okay. What did we say, or what did I say before when I explained the mental part? So we want to feel good, right? We want to be positive. We want to have a strong mindset. So my question to you, how do you feel right now, everybody? Are we all in a great mood? Everybody feeling perfect? If not, I will just stop. We do it another day. Feeling great. There we go. Okay. So let's do it then. This is my chart. Who is new to the Spartan template? Anybody? Does not know how we use our charts? Okay. Now everybody hopefully is more or less familiar with MT4, MetaTrader 4, which is a free trading platform you can download everywhere. You just have to Google it, MetaTrader 4, right? What you want to do is just, if you're new to this, just Google it, download it. There are so many brokers, retail brokers that offer this platform, and you can open a demo account right away wherever. Just Google MetaTrader 4 and it's done. I think they are changing it now soon. I've heard somebody told me that like soon we only can use MetaTrader 5, that they want to slowly get rid of MetaTrader 4. I'm not sure if that's correct. Yeah, so it doesn't matter. There's no big difference really. You have more time frames and other things to play around with, but more or less the same. Yeah. So what you do, you just open your account, demo account on MetaTrader 4, whatever broker you like. Doesn't really matter. What I like to use, but only for demo, is a broker called IC Markets. IC Markets. I just you can use a demo account with them. They don't close the account down, so you can play around with it for as long as you like, which is a good thing. But it's not the only one. There are hundreds of them right now. Okay. Yeah, the only advantage, as I said, with this one is that they are not closing your demo account. Yeah, whatever you like, guys, really. Now we can talk about this forever, but we won't. There is no best, really. They're all the same. They're all bad enough. Okay. Or good enough. Yeah, good enough for us to use. The good thing with this is that they really have easy to use charts. We can do almost everything on the chart, everything we need. And when it comes to live accounts, then you have to really do your research, depending on in which country you live in. Some work better, some worse. So it's not an easy call. Like you see, I've never really 100% recommended a broker, only once, which I regret now because they're all starting nice in the beginning and then they are getting funny. So you have to really check, depending where you're living, look at some reviews in the internet. There's so many. Just try one. When you are ready to go live at some point, just fund it with $1,000 or $500 or whatever. Play around with it, and then you will see if they will execute fast enough, if they widen their spreads too much, if they pay you out. Those are the most important parts, right? That you get executed when you want to, and that they pay you. Everything else is not really our problem. Okay. So, just for you to know so far. Okay, what we do on our template. We can, I'll try to figure out a way. Jeff, is it possible to add our Spartan template for MetaTrader into this page somewhere where we also have the recording so people can download it from there? It's not possible there, right? What about if we open like recreate one of those pages for the guys to log in, and in there they download the template? That should be possible to do. The link or something. Or is it on our web page? I don't even know. Okay, Tomek is going to share it in about 10 minutes. Then I will explain to you right now how to do it, but if we can also yeah, we can send it by email. So Jeff, exactly, we will send you this template by email. You have all signed up for this, so it's easy to just send it over, right? The only thing you have to do is copy it, go to your MetaTrader file, open data folder. I have so many screens open, I don't know where that one appeared now. Let me just give me a sec. Here we go. And here's the templates. Yeah, so you just copy it and paste it into the template folder. Okay, the way I just explained, that's it. Okay, guys? File, open data folder, and it says templates. You open this one up, copy, paste it in here. Sorry, guys. Accidentally killed MT4. Is it all okay with the audio? Can you all hear me? Voice okay, okay? Okay. Yeah, you want to restart it, or you can just refresh it. Get into your navigator here. You could also just refresh. I think that should be fine. Right click, it says refresh. That works for the indicators at least, and the EAs and everything. But you can also just close the whole thing and open it up again. Okay, so that's the easy way. We don't have to spend time here then explaining the details. I'll just tell you how you can do it manually in case you don't get the indicator. Very easy. You open up a chart, whatever chart you like, and when you go to the indicators, look at the Renko bars, right? And what you want to have on your charts is simply really no candlesticks, because it would look like that. You want the bar charts, and then you drag and drop in your Renko bar charts, and you can give it colors. Okay, what I'll do, I click right, and if you just do a right click for the guys that are new to this, and properties, then you will get the colors and the common thing. So I would go to colors, grid. The background is black. Okay, the foreground white, so you can see all the numbers and everything. And everything else, because we don't have bars, we have the normal come on, not the candlesticks, but the bar charts. When you click on this one, you want to have it green, like bar up, bar down, green, and that's all you need. And if you change your Heikin-Ashi candles, not Renko, oh man, sorry, I said it wrong. Not Renko bars, sorry guys, sorry, just delete. Yeah, Heikin-Ashi candles. Because they look a little bit alike, so not Heikin-Ashi, not Renko bars, Heikin-Ashi candles you want to use. Red or white, that's default, so you can use this. And when you have done it, you need one indicator, that's all, one indicator. And that is an exponential moving average, like the EMA. Well, you find it here, moving averages, right? You just drag and drop it over, and you change this to exponential. And we have three numbers. Here you change the number. We have the 12. Okay, this is the blue one here. We have the 36, which is this. We have the 200, which is the white one. And we have the 633, which is this one. You can change the colors for each of them by clicking on colors and change it there. The width, everything. You want it bigger or smaller, you can do it there, but you have to do it separately. Yeah, for each EMA you have to drag it back into the charts. That's the way I did it, and then you save the whole thing when you have all four of them on the chart and your Heikin-Ashi candles, red and white, plus the bar chart in the background. What that does simply, it's showing you on each candle the open and close price of the candle. Okay. So the way we have it, red is the 36 EMA, the blue is the 12, the 200 is the white, the 633 is the gold or brown or yellow one. Okay. Background I like really black. It's easy to spot. And when you have done this, you just right click, template, you save the whole thing as template, you give it a name, a Spartan Trader 1 or whatever, and you save it. And then it's done. And then it looks like that. And what you do then, it doesn't matter on what pair, let me just choose whatever template they have here. This is an MT4 default template. So when you see that somewhere you have a pair you have chosen, right click, you go to template, I call it Spartan Full, and then you click on it and it's there. Okay guys? Okay, is that fine? Can I continue, or did I do that too fast? Because it's also recorded, right? And again, not Renko. Renkos be used for something else. I meant Heikin-Ashi candles. Okay. And again, we send an email out with this to you. Okay. Spend already half an hour here, but it's fine, don't worry. You have to remember, guys, that many in here are very new to the Spartan system, so we cannot be too fast. We cannot go too fast, right? Great. So we are here, USDN, and the technical part, one, learning to see first. What we are checking right now is the first part, like let's say point A or whatever, 1. And this is understanding the charts. Okay? So what does it mean, understanding the charts? What do we need to know when we first open a pair or product? In this case, we are talking about Forex, right? Template is on. We have the USD yen pair right now. I've clicked on the weekly chart. Or let me just start with the monthly, the biggest of all. Okay? And you see price moving down, price going up, moving back down, going back up. Great. What we need to see first and understand first is what? I asked the older guys. What is the first thing we need to see on a chart? We are not thinking about trading, about making money, about money management, about setups, nothing. We just think about one thing. First of all, on the higher time frame, the highest we are looking at, the highest, which is the monthly here, right, would be really the trend direction. Everything else you said is right, but we go step by step. So we need the trend direction. We need to see if this pair is going in a direction. First of all, do we have a direction? We don't always have one, not even on the higher time frames. It means, does the price really go up or really go down? We only have 2 directions. The great thing with Forex is it can go both ways. We can trade up and we can trade down. Both are fine to us. But it has to go somewhere. And this you have to spot even on the higher time frame. It's very important actually that you spot this on the higher time frame. And the highest is really the monthly chart, because each candle is giving you a whole month. And if I look at this monthly chart, what I see here is the price is moving up, and then the price is coming back down. And after that, especially the last 2 months, have really big white candles. So what does that mean to us right now? Just by looking at this, that we have a direction, right? And what direction would that be? Everybody, please, quickly. Exactly, right? It's bullish, it's up, it's an uptrend, it's going up. You can see. First of all, the little dot is up here. The month is not over yet, but it's up here, meaning that the last days it's really still going. Those candles, they're not really candles, because you know the Heikin-Ashi candles are more an indicator than a candle, but you can call it whatever. We call it candles anyway because they look like one. Yeah. This is a huge candle of 1,400 points. The previous one was also that big. That means great, this is really going up. Okay. And we are not spending much time on a monthly chart, but when we trade a pair for first time, the monthly chart is the most important, because this is just quickly telling us the direction. If price is volatile or not, you can see that on the big candles. Okay. And you also see major support and resistance levels immediately. They're pointing out. Okay. I will explain the details. So what we needed to know is the direction. And we have a direction. You said it's up, it's bullish, yes. We also wanted to know about volatility, and you can see this on the monthly chart because we have big candles. So it's volatile, yes. Good stuff. What we need to do now is switch over immediately after finding this on the monthly chart only once on one pair. Then it becomes secondary, the monthly chart, is the weekly chart. On the weekly chart, we still see the volatility, very clear. We also see the direction, and we see the main trends. Okay, so volatility, direction, and main trends. The main direction of a trend. In this case, what's the main direction right now? Up, right? And we have a very simple filter for this one. And that is one of our favorite EMAs, the 36 EMA, the red one, the sexy one here. It looks like Christmas. Okay, red and white. This, the 36 here, this is our trend following EMA. So you want to write this down maybe. This is our trend following EMA. Especially on the weekly and daily chart, this is most important. And the basic rule says, as long as the price moves over the 36, the main trend, okay, especially on the weekly chart, is up. When price is breaking the 36 for good and it starts staying below, okay, then we have a downtrend. Okay. Now, one trick in trading to make money long term is, and George actually pointing it out here already, saying, my fear is that it has to move too far. I don't want to go in anymore. This is a problem that 99% of all traders have. Okay? Maybe 98. I don't know the numbers exactly. Why is that? Because we still think that we have to be right. That we want always to kind of make sure that things work out. But fact is, the market doesn't care what you want. Not for a second. Never ever. Which is great. I'll explain later on. We are still at the technical part, okay? So, as long as price is over the 36 and really stays there, our main focus would be what? Buying or selling trades? What do you think? We want to buy stuff. Exactly. When price is obviously staying below the 36, generally, do we want to buy or we want to sell? Exactly, we want to sell. Okay, we would like to sell. Now, if I look at the price right now, which is up here, I see white candles, and the white candles are the bullish candles, right? Showing us that the buyers are much stronger than the sellers. That's why we like to use the Heikin-Ashi candles. Okay? Because red candles are telling us that the sellers are stronger, white ones are telling us that the buyers are stronger. Simple and good information we need to have for now. Okay? What else does the 36 EMA do? Who remembers? Support and resistance, yes. And why support and resistance? Because the 36 EMA is acting as what? Yes, as you said it, as support, exactly as a trend line. Okay, you can draw trend lines. I'll show you how we do it anyway, but even if you don't draw one, then the 36 is your trend line. Therefore, price over the 36 uptrend, below the 36 downtrend. We focus on longs over the 36, we focus on shorts below the 36. We have also the 12 EMA. Now this one, of course, because it's small shorter, it's closer to price action. What would that mean? This is our volatility EMA. This is our trend following EMA. This is our volatility EMA. It's also acting as a trend line, but it's showing us when price is really getting close or always, or the 12 is following price closely, yeah, in one direction, we know that this is very volatile. Yeah, when price starts acting funny, like it's ranging and its price is crossing the 12 and going above over 12 and going back down and up and down, and you see the EMA is moving from left to right like a little wave, yeah, or like, you know, really like a, how can I say, like a deadline or something here, you know, then it would be it's telling us that this is starting to range. Okay, so this is our volatility EMA. If it's close to price, and price is still moving up and up and up, then we have high volatility. The main trend is the 36, and both together are very, very powerful. So if the 12, okay, here's better to see. If the 12 is crossing the 36 down and price is staying below the 36, especially after the crossover, then we have a confirmed trend change. Okay, so the blue line, the 12 EMA crossing the 36 down from up down, means that the trend is likely to change. Okay, so great information. The other way up, if it's crossing up, would be exactly the opposite thing. Okay, everything is important, guys, but right now just let's do the basic stuff first. Okay, am I too fast? Okay, so far, can I continue? Okay, now we have two more EMAs. We have the 200 EMA and we have the 633. Those EMAs we usually like to use on lower time frames because they're acting also for us as major support and resistance in combination with previous highs and lows, both of them. Okay, so the bigger EMAs are acting as support and resistance in combination with previous lows and highs with major support and resistance on the higher time frames. On the lower time frames, they're also helping us with the trend direction, especially for day trading. Okay, now for right now, we don't need them. We want to make the chart looking clear, so we just get rid of them. Okay, what I'll do, I zoom out a little bit, and then the chart looks a little bit weird, but we want to practice now. So what did we say in the beginning? We need to see things first. Now we start seeing things already, right? We see the direction, we see the volatility, we see the up and down trends, and because we see all that, we need now to take a little bit of action and draw some lines. But before we draw lines, we need to understand market behavior, basic market behavior on the chart. And when you look at a chart, we can start down here, why not? You see this thing is going up, right? It's retracing, it's going up. So what is actually going on here? You just see lines and candles. Okay, but what does that mean? Remember, this is it's the biggest market actually in the world, right? The Forex market. We're talking about trillions every day, changing hands. So what you see here is not just some candles. These are real people, companies, big ones, small ones, all over the world, dealing with all kind of whatever, from selling, buying, exchanging, everything. Okay, has to do with money. So what we see here is not just candles. These here are real people. Yeah, this here is like real energy. This thing is alive. Okay? It's not charts. What you see here is a living, breathing monster. A nice one. Yeah, like it's a monster. Give me a nice monster. Any name? What's the big one called with a little wings? The funny one. Not Godzilla or something. Loch Ness. Yeah, no. Yeah, Loch Ness. Exactly. There we go. Yeah, exactly. The one that likes kids, right? That's it. A big monster. Alive. No. No. This is not a money-eating monster. That's a money-sharing monster. It's your friend. Okay, guys? It's your friend, not your enemy. So, why do you need to know this? You need to have respect for this, but you don't need to fear it at all. And you need to understand what everybody else is doing so you can make money. And out of 100 people, how many people are making money when it comes to trading? Does anybody know that? Exactly, right? Maybe 2, maybe 5, more or less. Yeah. In theory, it's maybe more. Practically, it's probably less. Because most people that make some, they give it then later on back. But the guys that make long-term money, it's maybe 1, 2, 3%. Now, it sounds discouraging, but it isn't. It should not be like this. I'll tell you why. Because out of the 100 people that are trading or trying to trade, they're not there to learn trading. They're not there to actually invest time, invest in themselves to learn to do it. They just want to make quick money. They've heard somewhere some advertisement, because it's scam all over the place. You know how it works, right? Everybody is an expert. Everybody knows everything. So people think, especially with the latest binary stuff and whatever, they always find new products. It is a way to lose quick money if you don't know what you're doing. Okay, so people think that they can make a couple of million over the weekend or after the weekend just because they open a small account and they've seen an advertisement somewhere. They just follow it and that's it. Okay? That's the 100 or the 98 out of 100. That's just how it is. Most people just maybe have money issues and they think, okay, I'll go in there and I make quickly money. Only 2, 3 or 4, 5 out of 100 are really thinking about learning this, because trading is what? It's a big business. It's your personal business. If you don't get it not only into your head but also into your heart, it will never happen. You will never ever make long-term money. Okay, so again, I'm not telling you that to discourage you. I just want to show you or tell you how it works. Okay, and it's not difficult to make the money, but you have to understand what you need to make the money. So you need to make this your personal business. You need to learn it. You need to understand it. And if you do so, spend some time and also a little bit of money to slowly earn the right to make the money. That's how it works. You do it like this, it's only a matter of time. For some, it takes longer. For some, it goes faster. It really depends on your focus, on your mindset, on your goals, everything you really are after, the things you're after, okay? So you need to understand this, and when you look at a chart, you have to know that here are millions of people, and most of them just want to quickly make money, and it doesn't work like that. So the charts, because 98% or 95%, whatever number it is, big number, is not really making money, okay? And a few, the 5%, with a really good amount of money, like the really big accounts and especially the big institutions, they will push, those guys will push in the right direction, and everybody else, the little guys, get killed on the way up or down. So what happens? The charts always do the same thing because we are not changing. Yeah, so the charts are people. So what does the market do? It's breathing in, it's breathing out. It's going up, it's going down. It's ranging for a while, it's then going back up, retracing, ranging, going back up, retracing. Like breathing in, breathing out, breathing in, breathing out, breathing in, breathing out. And then it decides at some point it wants to go the other way, so it does the same thing the other way. Breathing in, breathing out, breathing in, breathing out. Getting it, guys? Yeah? And this is happening because the big money is pushing in one direction until, for some reason, we don't care, it's changing, and then it's pushing the other way. Again, the big money. And the little guys in between take a little bit out sometimes, or they get killed, like, you know, the account is dead and then it's over. So you will see the same thing happening again and again. And I didn't finish explaining, as I said before, out of 100 people, 5 are making money, the rest not. But those guys that are getting in to make quick money, see after a while, maybe after a week, maybe after a month, maybe after 3 months, okay, that it's not the way to do it. And what do they do? What do they do? They leave, exactly. They stop doing it. They said, this crap doesn't work. This is not for me. And then another 100 will try, and another 100. And again, 2, 3, 4, 5 will stay. So when we say 98% or 95% of all traders are losing, this is not a correct statement. Why not? Because those guys are no traders. They're just people that try, doesn't work, they leave. The 4 or 5 guys that stay and learn how to do it, and where I said it's only a matter of time when they get it, when they insist, okay? Those are the traders. Do you understand the difference? And those probably will all win when they're ready. Okay? It's like with every business you know. Like I like to use this example always. Dentists. How many are good? I hate them, by the way. Out of 100, how many are good? Really good. Some you really want to go. That will not make you like, you won't leave with a lot of pain. How many? Out of 100 guys. You know the numbers. 0. Yeah, maybe 1 or maybe 2 or maybe 5. How many? I don't know. Lawyers out of 100 are really good. 2, 3, 4, 5, right? Yeah, probably none. Yeah, honest ones are difficult to get, but doing their job really good, whatever it is, in whatever profession. How many pilots are really, really good? How many? I don't know, whatever. It's always the same number in every profession. Out of 100, maybe 5. No, not 100%. They know the basics. Yeah, and the plane does the rest, I guess. Yeah? They're good enough, but they're probably not great. Yeah, it's always 5. 5, 5, 5 max. And that's why the world, especially the financial world or the capitalism, like democracy, right, works like that. Because this magic number, 2, 3, 4, 5 out of 100, works in every profession. That's why things are as they are. Always like that. Okay? Now, how many... I mean, when we started, Jeff and I, there were no many systems. Now you have to figure out, you had to go your own way. So, but now, if you Google now, you find on all, not only Forex, whatever, stocks and binaries and million products. So how many of them, or the systems, the philosophy or whatever, how many are good out of 100? Now that you have thousands. I probably have to pay you for this comment, right? Exactly, right? It's the same number, guys. Yeah, out of 100 there will be 4 or 5, because those are the ones that are actually, tested, and people are doing it, and they put their heart and soul into it. And the rest is just, let's just sell it. Like with everything, okay? Okay. The reason I tell you all this is because when you open a chart, you need to remember these little but very, very powerful things. Yeah, how the markets really work. Then you will start seeing things on the chart, good stuff, really faster, easier. It helps you making decisions faster. Okay? Now, we are still at the weekly chart. And on the weekly chart, we said we wanted the direction, yes, and everything, but we also want the market behavior. So what is the market doing? The little guys in between falling apart, and the big bucks, the real money, is going one way, retracing. So what do we have? A big breathing monster. And what it does, it always creates those nice big or smaller 1, 2, 3s or A, B, C setups. Meaning, if price is over the 36 and we have an uptrend, visible on this weekly chart only is this big move up before price actually decides to breathe out, like this was a big breather here. Breathing out. See the red candles? It doesn't look like much, but it is 1,000 points. Yeah. Then it's breathing in, slowly start ranging because there's not much power left. And after a while, it's again breathing up. Price is going up, breathing in, breathing out, ranging. Breathing in, breathing out, and doing it here again, and here again, and then this, here again, and then it's changing directions. But it's still breathing in and breathing out. So when it's below the 36, what does it do? Creates a lower point, breathes out, lower high. Creates a lower low, creates a lower high. So 1, 2, 3. And again, 1, 2, 3. And after that, it's 1, but we don't have a lower point anymore. Yeah. Price is not going lower. It's stopping here. It's finding support, previous low, and another one in the same area, no lower low. Then it's going up, and it's breaking the 36, still going up. So we know already for weeks that we have an uptrend. It didn't breathe out yet, but it is visible. Okay? Now, do we understand until now what it means to have a living, breathing thing here with breathing in, breathing out, creating A, B, C's, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. In an uptrend, price is creating higher highs, higher lows. Sometimes not higher highs, but at least higher lows. Higher low, and then here higher high, higher low. Range. Higher high, higher low. Higher high, higher low. And in a downtrend, it's doing exactly the opposite thing. A low, lower high. Lower low, lower high. Lower low, lower high. Until there's no lower low anymore, and it's changing directions again. Okay, guys? So far, do we all understand trend direction, market breathing in and out, and trend change? Basically, I would like to have more answers, more yeses. The more the better. We have here, like, I guess over 100 people in the room or something, right? So, okay. Okay, great. Now, you know already more than most traders do. Just by looking at this chart. Okay. The trick, why do we use so high time frames to look for the trend direction and the volatility? Why do we use the higher time frames? Who remembers that? Yeah, that was a to a point, this answer, because 95% doesn't. Exactly. Exactly, right? That's exactly why. On the higher time frames, we see the real direction. And we also see what the big guys are doing. I'm not talking about the big guys that have a couple of $1 million accounts. I'm talking about the really big guys, the big institutions, whole governments. Okay, they look at weekly charts, monthly charts, daily charts. Everything below that, they would not even bother looking at, because the main direction is only visible when you check those higher time frames first. Okay, so from now on, doesn't matter what you did before or what are you going to do in future trading wise, but make sure you use the higher time frames to do a little top-down approach. We're going to do this soon, figuring out what is going on, what are the big guys doing, because when you trade in the direction where the big guys are trading, you are trading in the right direction already. You are literally surfing on the big waves. You're surfing on the tsunami. You're not standing on a beach trying to hold it back with your hands. Okay? You're surfing on it. So you're not only surviving, but you'll really take a lot of long-term money with you. Okay? So you will not get smashed. You have, or you want to consider looking at the higher time frames. I cannot force anybody. I'll just tell you what would be wise to do if you want to listen to me. Okay? Now, we have done getting into the basics of understanding the charts, market behavior. How does it behave? It's going up fast, in between ranging a little bit, but we have a trend, and then we have a trend change. Okay? Now, fast and slow moving markets. How would you really, on this weekly chart, call this area here? Is this a fast moving market between here and here, where my, let me do it like this, in between those yellow lines? What do we have? Slow. Correct, yeah. What would you call the last couple of candles here? Fast. Exactly. Okay. Of course, we are going down to the lower time frames, but we want to see first what the higher time frames are doing. What are the big guys doing? What are they after? Okay. Okay. So when that is done, let me get back to this. At this point, we're on the weekly chart. We did understand the downtrends and uptrends. We don't need this. One more thing we want. Now that we know what is important on the higher time frames, we did identify the trends and the ranges, the fast and slow moving markets. Here's a trend. What is down here? Is this also a trend? On the weekly chart, what is this? It's a range in a downtrend, right? We have a trend, but in between we don't have lower lows anymore. Price not moving lower. We have bottom formation, 3 areas of support here, 3 touches. So we have a little range in this downtrend, and then we have a trend change afterwards. Okay? So uptrend, downtrend. Here's the same thing. What do we have here? Here's still up, but then it's changing. So what do we actually have here? Is that on this weekly chart, on a weekly chart, an uptrend still, or is it something else? It's not creating higher highs and higher lows anymore at that point, until this is breaking and creating this 1, 2, 3, 1, 2, 3. and then actually going lower. Up to this point, this is, yeah, consolidation, or what do we call it? It's a range still, yeah, wedge, whatever it is. Price is not having a clear direction anymore. So for us, it's a range, okay? Before it's changing the trend. Now, the trend line we can draw simply by following the 36 EMA. As I said, this is our trend line. Or we find the retracements on the downtrend when market is breathing out and connect those. This would be closer to the 12, like in between 12 and the 36. This would be a powerful line with more than 3 touches. What do I mean with 3 touches? Price is creating like here, like some at the highs, you know, some range, and then price is going down. It's retracing, going down, retracing. So we connect the retracements to draw a powerful trend line. When we have more than 3 touches, 1, 2, 3, then we have a powerful trend line. Okay, 1, 2, 3, 4, 5, and then trends. The trend is changing here and price going back up. So trend lines will not live forever. They're there, so then they can break at some point, right? On the uptrend, it's the same thing. You connect the line. At this point, it looked like that, like this, like this. The angle of the line is sometimes changing. Look, here you have a line. The 36 and the line is really close together. Then the angle is changing like this, and then like that, and then like this, okay, and then like that, and then it's over. Okay, as long as you can connect 3 touches, and you get higher highs and higher lows, or lower lows and lower highs, you have a trend. If you cannot do that anymore, then there usually a range is happening. Okay. On the weekly chart, you don't have to draw the trend lines yet, but you should as an exercise. Okay, that's the first thing you want to do. And what else do we want to do here? We want to draw horizontal support and resistance lines. Okay? So, we take our horizontal line. Boom. Where do we find horizontal resistance? When price is going up, we want, or we expect price at some point to breathe out, right? To retrace and give us this 1, 2, 3 we are talking about. So where's it likely to happen? In an area of previous support, because previous support in an uptrend was here, right? In this area. And if price now is coming back to this area, it will act as resistance. Okay? Meaning, if I take this, and take this line, and look for the most touches, first of all, down here at the spikes, we had 1, 2, 3, 4. We had a range starting, right? 1, 2, price. We tested this area again and again. Correct? So 1, 2, 3, 4. And what did happen? Price did not stop here. It did not react. Most of the times it will. Okay? But sometimes it will not. So it doesn't matter what we think. We'll just have our lines ready, and price will tell us what's really going on. So price action. So price going up, breaking this level. What's the next area of resistance? We want to find an area where price before on our chart had trouble, showing us bounces, weaknesses, spikes, whatever, ranges. In this case, the next area would be somewhere here, because this is an area where price tested this area many times, like here and here. Okay, you can see this spiking all over the place here and here. So this would be the next one. Right, guys? Do you agree with this? Yes, no? What about another one? If we go higher, here's someone. 1, 2, this low here, now acting as support there. Here, so more touches. Those are really pointing out, right? Pointing out, pointing out. The next area would be higher. We don't only want one area. So now if there's one area with a lot of candles, we can use it. So it would be here. Better is to find an area where you have a touch, a retracement, and another touch, or maybe historically back. Now on the weekly we don't want to go back. This is more than enough. That would mean that you would have to draw a million lines, here one and here one and here one. We don't do that. We want only one horizontal support and resistance area close to price. Okay? For instance, I take this line. Now the price broke this area. This would be the next. But price is already there. So if it's bouncing here, great. If it doesn't bounce and it moves higher, then my next area would be here. What we don't want to do is placing that horizontal line at the highest point. Okay? We'll look at the spikes and the bodies of these Heikin-Ashi candles and leave the line where we find the most touches. So between the spikes and the bodies, somewhere here, not at the highest point. Always a little bit in between, a little bit lower if possible. Okay? Now in this case, what do I have? Price did already break the previous area of resistance, which now is acting as support, right? And here, this would be the next area of resistance, because we have all those highs pointing out very clearly on this chart. So would that be fine for everybody? Major support, major resistance. Below price we need a little bit of support. Over price we need resistance. Is that okay? Okay. And that's all we need on the weekly chart. So what do we have? Trend line break. Trend is up. Next area of resistance where price maybe bounces. Here's also one, but price is already there, so you don't have to draw the line. And below price you want an area of support. So the one that are really pointing out is the one that is just below price. In this case only 170 pips below. Okay? We don't need more. If we would draw another one lower just to practice, where would that be? Here or maybe somewhere here? I would like this area. Why? Because I have previous support, multiple touches, and another retracement exactly to this area. So I get more touches here. It's easy to spot. Done. Okay? That's it. So what do we already know? Right now, we have the direction, we know it's an uptrend, we have the major areas of support and resistance on the chart. We have everything we need not to get in, but when we are in, we know where to start taking profits, or where price is likely to bounce and retrace. And we have this information theoretically sitting on the chart by drawing those lines on the weekly chart. And that's not difficult to do. Okay? Are we okay so far? It doesn't matter what indicators you have and all the fancy stuff you might have bought. It doesn't matter at all. The most important parts on that chart or on the charts are really the ones that are pointing out two or more or three touches or more on a horizontal line. Two are enough. Sometimes also one area if it's really pointing out, but the more the better. This creates a lot of resistance and support. So price is usually bouncing in this area. This is the most important information you need on the weekly chart after the direction, after the volatility and the main trend. Okay, can I continue? Or do we have any questions so far on this matter? So now that we have done trends and ranges, major support and resistance levels, market volatility, just by looking at those charts we know it's worth trading because they are volatile, right? And we are already started with a top-down approach going from the weekly, from the monthly, one time only, to the weekly. On the weekly we did look for major support and resistance, a simple trend line break in this case in combination with the 36 to make sure we're on the right side. And now that we have the lines ready on the weekly chart, what's the next step? Any idea? No, we don't ignore any EMAs. Now we just combine. We always combine EMAs with trend lines. Sometimes you don't have a trend line or you cannot draw one, then just the 36 is your trend line. Exactly. The next step after the weekly and after the major support and resistance lines, we check the daily charts. On the daily charts, we can see one more time, very easy to spot the volatility. And if price simply is moving fast over the 12 EMA like it does here, and it's not retracing back to the 36 at all, like we have a big breathing in, no breathing out at all on this time frame, okay? That means that we have a very, very volatile pair right now, okay? And this pair is behaving like that a lot. USDN has a funny behavior. It could be ranging for a long time, and when it starts trending, it's just going and going and going, okay? So what do we do here? We still have our trend lines. The lines that are coming from the weekly, the trend lines, are also visible on the daily. So a combination of weekly and daily trend lines are very, very powerful. Something you want to write down. If weekly and daily trend lines are ending up really in the same area, they're most powerful. And you want to pay really a lot of attention to those, okay? What line can I draw here? This is 1-2 touches, but then price is not going that far anymore. Change the angle. Yeah. Guys, do you mean me here? Caps lock? What are you talking about? I'm not touching anything. Ah, sorry. Okay, you're talking to each other. Sorry, I thought you were talking about the charts or something. Okay. So when price is going up like this and it's not retracing back to the 36, we have a lot of volatility. The only line you can draw is the line that is close to the 12 EMA, close to price. And that would be a trend line, yes, of course, but we also like to call it volatility line because it is just so volatile. Okay? You know where your support and resistance is. You have seen it on the weekly chart. Sometimes it's not easy to spot on a weekly, then you will see it on a daily. But because it's very clear where support and resistance is on the weekly, we know where it is. Nothing to bother. So far, the chart looks like this. We didn't change much. We just looked at the volatility. When you see price is so volatile on the daily chart that it doesn't retrace to the 36, this is really good information because it will tell us that we can get in to this trend almost every day. Why? Because it's still so powerful. We never know when this will change. We never know when price decides to retrace. But we know that when it's volatile like that, it will try to find the next area of resistance before reacting. 9 times out of 10. This is good information, isn't it? 9 times out of 10. So, on the daily chart, we are okay so far. And what would be the next step? Now that we have our line ready, trend line, daily chart is there. We want to trade this pair for our own reasons. We want to trade this. So what do we have to do now? We have to actually look for a trading setup, right? We need a trading setup. Exactly. On what time frames could we trade or do we trade according to the basic rules? There are many combinations, right? So we can use a daily chart to take a trade. We can take 4 hourly entries, 1 hourly entries. We can even go and combine 4 hourly or 1 hourly entries with 5 or 15-minute charts, no problem. Now this will be too much detail for today, but we are going down to the 1 hourly chart for sure. Okay? Now that we know what's going on a daily chart, we would switch to the 4 hourly chart. And on the 4 hourly chart, we'll see details. We see market behavior closer, like price action. What is going on today? It's not every candle here is 4 hours, so you can really see what's going on. You don't have to guess anymore. Yeah? What do we see is that in a powerful trend like this, price will create our 1, 2, 3s. When it's up, it's going up. Higher highs, higher lows. 1, 2, 3s, 1, 2, 3s, 1, 2, 3s. Okay? Higher high, higher low. Higher high, higher low. And at some point it will range a little bit. And then again creating higher highs and higher lows in an uptrend. And here you can draw a different line. You don't have to draw the daily at all because you already know that that was the 12 EMA. But on the 4 hourly you have your trend following EMA again. And what does this one tell you? That this trend is still going up quickly. It's very, very volatile. And price is still creating higher highs and higher lows. So how do you draw a trend line here? You need 3 touches or more. One retracement, another one here, another one there, another one here. You can extend it now. Not exactly touching, it stopped at the 36. But again, a combination of the 36 and the trend line is most powerful, right? So you have both. There we go. And the angle of the line would start changing at this point, like this. So what is likely to happen? What do you think could happen here? Look just back on the history of this chart. History of a chart is a very important thing. Price is telling us what it did before. So most likely we'll do the same thing until it's changing behavior. So what do you think might happen? I'm asking everybody. Yeah. So exactly, all right. Most of you got it. Yeah. We don't know 100% what it will do, but at some point, what we wanted to do is to come back to the 36 EMA ideally, or back to the trend line, because it did that before, and every time it did it, price bounced on this area and moved higher, giving us an opportunity to find entries to go in here and trade. Okay? So, first thing we want when we see a powerful trend and the chart is telling us that it's breathing in and breathing out smoothly on a time frame, like the 4-hourly, for instance. Okay? So when it's coming back to the 36 EMA, this is our most powerful EMA, right? And if the chart is telling us that price really loves to go back to this one, this is our textbook scenario. Like a conservative trading setup would be, or we find a conservative setup when price retraces ideally back to the 36 EMA or an existing powerful trend line that is also close to the 36 EMA. Now this would be the ideal thing when we see in an uptrend like this, price retracing back to my trend line or the 36 like it did all the time. So I would like to see price ideally going back to here before I start thinking about trading something. Is that okay so far? Don't worry, I'll go over everything again quickly afterwards. I just want to be okay so far. Okay. So there's one more thing missing. It's the combination of a setup with money management. And what we do, because it's already 1.5 hours, we'll take a 10-minute break, coffee break. And then we are looking for setups. Okay? Is that okay? Okay, guys, great. So I'll catch up in 10 minutes. Okay, can you hear me again? I'm back. Yes, 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 guys, I'm recording this. Yeah, I'm recording it. No worries. So what we still have to do, as I said, we have to look for setups, right? We want to look for setups, and when we find a setup, Before we trade, we want to understand money management. So I'll make it really simple. And again, we are doing the basics, but it's still a powerful thing when you start, when you get used to it. So no worries so far here. It's all okay. 1 second, where is my... No, there we go. Okay, it's all here. So what we said is, when we have our line, right, with our 3 and more touches, what we want ideally to be conservative, to understand the basic and conservative way to do it, we would like to see price doing exactly the same thing it did before, because then we have the biggest chance of finding an entry and making profits. So what we would like to see is price at some point to get back to the 36 or to the extension of this line. Okay, both is fine. Both are good, either here or here. Now, when that happens, at that point, let's say price retraces back to here, close to the 36, not exactly to the line, okay? What would we have here on the chart? What do we call this setup, or how do we call this setup? Because it will be a setup. It will be, as I explained before, market breathing in, breathing out, right? It would be exactly a 1, 2, 3. Yeah, 1, 2, 3. We had many of those. 1, 2, 3, 1, 2, 3. Tiny ones in between, big ones. But we still get the 1, 2, 3s. We always get those retracements. And market is always breathing in, breathing out. So as long as we have the direction on the weekly chart, we have the volatility in direction on the daily chart, we have the setups now on the 4-hourly chart. Okay, we have everything. Price is still going the same way on all those time frames, all the combinations. Again, quickly, monthly, weekly, daily, and we have our lines and resistance and support ready. 4-hourly. Okay, and now we say, okay, but there is no setup. No, there is no setup yet. We just checked one pair, but we are just learning how to do it basically. Okay, there could be a pair tomorrow morning. Now it's Sunday anyway, so market will be closed for another 2.5, 3 hours. But tomorrow morning when I wake up, I might get this. Maybe it decides to go up before it's coming down. Okay, then I don't have a setup. So what we don't do, we don't chase. We want to see the price or the market doing what we expect. So the price can do whatever. It's not up to you or to me. But we know, or we should know, what we want. And we want a setup that looks like those. We want the 1, 2, 3s, the retracements, and we want the retracements back to our support line, back to the 36 ideally, because only then we have a 1, 2, 3 setup that actually meets our rules. Okay? And if we don't have it, we don't trade it. Yeah, it's very important that you get used to something, and when you get used to it, like to the setups, okay, and you trust the setups because you know long term it works, that you really wait for the market to give you those setups that you are looking for. If the market decides to do something else, you're just not interested in the trade. Okay? It's like, simple example, you go want to buy, I don't know, trousers, jeans, or whatever, and you want a black one or a dark blue one, and they only have green or white in that shop. So would you go buy a white one when you're looking for a black one? Yes, no, what? No. Exactly, because it's not what you want. It's the same with trading. You have to wait, or you want to wait for the setup that looks good, a setup that you like, and if you don't like it and it doesn't look like it's tradable for you, you don't touch it. Everybody else can do it. Whatever. Okay? You do what you like. And you need to be able to see, and you need to be able to feel it, and then you trade it. It takes a little bit of time, it needs a little bit of experience, but thinking like that, find your own way, will help you a lot. Okay? Now we will have a setup. We assume we get this 1, 2, 3, and price is coming back to the 36. Okay, and then what will it do? If price really wants to move higher, it will react at your extension of the trend line or the 36, and it will break this line that you have drawn, and it will probably, not sure, probably, if market really wants to go up, reach the next area of resistance which you already found when doing your top-down approach. Okay? Now we need rules to get in. Correct? What have we done so far? Volatility, direction, market behavior, and everything. And we have done the setups. What is a setup? On an uptrend, we need highs, new highs, retracements, but the lows we get should be higher than the previous lows. So look at this, lows, higher high, higher low, higher high, higher low, only to the 12, higher high, higher low, higher high, higher low, range, higher high, higher low. This is not higher than this one, but higher than that one, higher, higher low. So you get your higher lows and your higher highs in the end. So you get a lot of good looking 1, 2, 3s on this chart. Here's one. It's a tiny one, not easy to spot if you're new. Here's one. And then back to the 36, even here's one. Can we all see, recognize, identify the 1, 2, 3s on the chart that we trace back to the 36? Yeah, Bill, that's correct. Yeah, good song. Can we recognize the 1, 2, 3, guys? I would like to see more answers, more answers and replies, please, just to make sure I'm not talking only to a few people. Now, one thing again to remember, you don't have to remember everything we are saying here, because we are doing a lot and we're saying a lot and it will take time. Okay, you don't have to remember. You can just watch the recordings afterwards anyway, probably 10 times. Not all together, like step by step, a little bit here, a little bit there. You'll get there, okay? Oh, thank you very much. Okay, so 1, 2, 3s, 1, 2, 3s, 1, 2, 3s, and hopefully another 1, 2, 3. When those 1, 2, 3 setups are retracing and we get our breathing in and breathing out, what they usually do on the 36 or the extension of the trend line is they are bouncing on it and moving higher. Sometimes they move up fast, sometimes it takes a while. Okay, so let me use an easy example, because when you would trade, you would look for the easy looking setups, not the difficult ones anyway. So you want to focus on the easy stuff first. Hey Carl, you were in Las Vegas? Is it the Carl we had in Las Vegas? Hey, how are you? Everything okay? Nice to hear from you again. Okay, great. Good stuff. Okay, so when we look for setups, right, we want nice, good looking setups. And that means a nice, good looking 1, 2, 3 needs volatility and it needs nice looking candles. So I didn't choose the easiest or best looking ones here, but fair enough. Why? Because you don't always get the perfect looking ones. And if I show you only the perfect looking ones, the textbook ones, then you'll never find a really good setup soon, right? And we want to you to be able to find also the charts that or the setups that are not that perfect. So what we would like to see in a good 1, 2, 3 setup is on an uptrend, good white candles like closing higher than the previous ones, and ideally nice fast retracing candles with not too many white in between. So here we get 1 and here we get 2. Sometimes you don't get any. You just get 1 in between. But sometimes you will get also some white. What is important is that the price touches the 36 before it's going up again. Okay, so here, what do we have at that point? If we don't draw any lines, sorry, you still see the 1, 2, 3 happening, right? Point 1, point 2, point 3. Correct? You see it all. But if you start drawing the lines, you need to draw the lines that way so you can actually find a setup clearly. So what will we do? We will just connect point 2 and point 3 like this. Sorry, point 1 and point 2. 1 and 2. I forgot how to count from 1 to 2. Okay, point 1 to 2. Okay, and then you want the retracement back to the 36. Now in an uptrend, a 1 to 3 needs to retrace, as I said, ideally to the 36, but the third point, point 3 down here, the retracement, must be equal or higher than point 1. Because if price would go down to here, then this would not be a 1, 2, 3 anymore. Correct? 1, 2, 3. We need a higher high and what did I say? A higher low. Not a higher high and a lower low. And there's no 1, 2, 3. Price has to stay above the 36. So you would draw your line like that. And here, let me make it bigger for you. Price did move fast down to the 36. So the angle of that 1, 2, 3 changed a little bit. You see this? It went faster. Okay, so you can draw the line. First it looked like this. But then because price went down fast, you can then start drawing the line like that. Does it make sense? Over the bodies of the candles when you draw the 2 to 3 line. Yeah, like this. First. And then because it went faster, you can draw it a little bit like that. It's still over it. Then what happened? Price bounced. And we get a first big white candle where the candle opens low and it closes higher. Do you see this one? This candle here. So we have the bounce of the 36. We have a candle that is opening low, closing higher, and it's also breaking our 2 to 3 line, the line that goes from point 2 to 3. You don't want to draw it like this, because if you draw it from this point to this point, you don't see the break. And you want to see the break of this down move. And you want to see the next candle opening low, closing higher. And the change of the color. Okay, so white and then reds, and from red after the bounce back to white. Makes sense so far? Okay, 1 second. Here we go. Now, no, guys, don't we don't want to fight here or having, or blaming anybody, somebody. It's okay. We're all having fun. Let's just focus a little bit on the charts. That's all. Now, here we have our entry. This is a setup. 1, 2, 3. Bounce. And after the bounce, we have a white candle opening here, closing here. This would be our entry candle, guys, right? We get in here on the close of this candle. 1, 2, 3. Bounce on the line, bounce on the 36, and here's a setup on the close of the candle. That means because those are 4-hourly candles, you get an entry when this 4-hourly candle is closing. Do we get this, guys? Yeah, I'll repeat again on a different setup, no worries. So, if you look at this one, one, the lowest point, 2, and then from 2 to 3, but not like this. We draw the line over those candles. Okay, here I don't have a higher high. This is not higher than that, but I have a higher low. This is still higher than this low. So does it still qualify? Is it still a 1 to 3 setup? What do you think? It is, exactly. Now, where's the entry? After the 2 to 3 line break, we get another candle. This is opening low. It's closing higher. It is white. It looks volatile after bouncing. So when this candle is closing, is that another entry? Yes, it is. Okay, so as long as we get higher highs and higher lows on our 1 to 3s, retracing back to here, and then over those candles we draw the line, and we get a candle. Look, here's a white candle, but what happens here? It opens high, it's closing low. It's white, but it's not breaking the line, and it's closing low. We want the next one. Opening low, closing higher. Okay? And it's ranging for a while, and then it's going up. Here you get another one. 1, 2, 3. Drawing the line over the candles. What problem do we have here? We have a nice powerful candle. I don't know if it's caused by news or something, but this candle is huge. It's 250 pips, and it's closing very, very high. So, if you look at the previous examples, when a 2 to 3 line candle is breaking and closing here, okay, we find an entry between point 2 and 3. usually in the middle between point 2 and 3. Here's the same, 2 and 3. The entry is in the middle. 2 and 3, the entry is in the middle. 2 and 3, and here the entry is way above point 2 on the 1, 2, 3. It's not in the middle anymore. Okay, this is only one reason why it's not good. So would we take this one? Is that an ideal entry, let's say? We wouldn't take it. It's too big and it's getting close to resistance anyway, but forget that right now. As a setup, it's not that you can never take it, but generally to start with, try to ignore those and don't trade them. Trade the ones where you get a good candle, a good entry candle between point 2 and point 3, and not the big ones, as an example for a setup, because we are just covering the setups right now. Okay? So are we okay with our 1, 2, 3 setup so far? The 1, 2, 3 setups are the basic setups of the Spartan system rules anyway. Yeah. So if I zoom out, you see we get all those 1, 2, 3s all over the place. Sometimes good ones. Good ones are the ones that retrace to the 36, and the other ones are too steep, too fast, and you want to focus on the 36 to start with. Now, when I'll check my chart, I go back to my daily chart. What happened after that break, after that line break? We got triple bottoms, multiple bottoms, so price did not create lower lows anymore. First sign, we hit the resistance line, so this looks like a wedge. And then price decided to, boom, break that line, move up, trace first to the 12, and then in the end it retraced also back to the 36. Now we ignore that big spike because that was election day in the USA. Okay, so during elections, and if somebody's blowing something up, or I don't know, bad things happen, then you will see some big spikes, especially when things happen like the elections or big announcements, like really major stuff going on. But you don't get it too often. Okay, so we ignore the spike right now. We just look at the setups, like the Brexit, exactly. Yeah. So price is going up, retracing back to the 36. Ideally, we want the retracement back to the 36. So we have a conservative 1, 2, 3. After that, price, except of the spike, elections, right? Price really changed direction, moved up. So this 1, 2, 3, the first 1, 2, 3, you want to write this down. You will watch the video, but remember this, please. The first 1, 2, 3 that appears after a daily or weekly trend line break. The first 1, 2, 3 that appears in the other direction. So when a trend is changing from down, in this case to up, and you get your first daily 1, 2, 3, and afterwards you see price going up, like really confirming that it wants to go up. This is when you get a trend change confirmation. You need a 1, 2, 3 setup after weekly or daily trend line break to see a trend change on the daily chart. Okay, write it down, please. Weekly or daily or combination of both break, and after that you want to see the first, ideally the first daily 1, 2, 3, and after the first daily 1, 2, 3 in the other direction, if you see prices going up, this would be your confirmation of a trend change, which means after that, what way, in which direction do I want to trade? Only, ideally, especially for you right now when you're doing the basics. You want to look for longs and get in somehow. Okay, exactly. Get in somehow to make profits long term. You can get in, you can get back out for whatever reasons, but as long as you see that and price is staying now over the 36, you want ideally to focus on the longs. And the first setups after trend line breaks, especially daily charts, are the ones you want to take. So if you were to trade on a daily chart, this first daily setup would have been your entry. If you don't want to do it on a daily, which makes sense because some people don't have big accounts and they cannot have 2 or 3 or 400 pip stops, right? They would go to lower time frames. But this is the confirmation. So when you get the confirmation and it's visible on the daily chart, you know in which direction you have to trade until it looks different. Then we went to the 4 hourly, and on the 4 hourly chart we got our 36 EMA retracements here. Before we only got retracements to the 12. And this was your daily 1, 2, 3, then it was election, so we ignore this one. Price went up and only retraced back to the 12. Correct? So according to what I taught you today, you cannot take any trades because price did not retrace back to the 36 on this 4 hourly chart. You think there's another solution to look for setups? In this area here after that happened? Any ideas? Lower time frames, right? So after the 4 hourly chart, what is our next time frame to check for entries? It would be the 1 hourly. And if you see a retracement to the 12 on the 4 hourly, then on the 1 hourly, not always, but usually it's a retracement on the 36 on the 1 hourly chart on the lower time frame. If I check, is the 1 hourly now? This is my break. Now what do we get? Almost retraced to the 36. Here retracement to the 36. Here I get one almost. Here's the real one. Here I get one. Here I get one. And I get more, even in the range. Okay? Do we see that? Okay. So when we are in a trend, and the trend has already started, meaning there was already a break, there was even a daily 1, 2, 3, and we are somewhere here and we say, hey man, I don't know, here's resistance, the next highs and stuff. Should I get in? Do the top down. How does the 4 hourly chart look at that point? It's going up, okay. You don't know if it will go down to the 36 or not. So you have to compare 1 hourly and 4 hourly charts. And when you get your first setup back to the 36, sometimes it's not going exactly, like if there are 10 pips missing on a 1 hourly chart or it's between the 12 and the 36, it's fine as long as you like it and it looks good. Ideally, there's the crossover, there's the first setup. The first setups after the crossover is of course always the best thing to do because you have enough space probably and the trend is just starting. So it's just better to look for the first setups. If not, okay, the one that goes back to the 36 EMA. Higher high, higher low. Higher high, higher low. Okay, and if you get a 2 to 3 line break candle that is breaking and closing higher than it opened, then you have an entry. Okay, you have an entry. What you want to consider always is early entries. Like you had your daily 1, 2, 3 here. There was a confirmation, price is going up. Now, since this, on this powerful uptrend, It's an extreme example, that's why I used it, right? You have so many 1 to 3 setups on the 4 hourly and the 1 hourly that it's really hard to say, oh man, what should I do? Should I take it now? Should I not take it? What's going on? You know, I got already a million. And that is where money management is so important. Okay, but before we go there, we still need to look for the setups. Going back, we said, okay, I'll saw this one live. So where do I go in? I go in here. Here's my entry. And then it will go. You will also have to draw your horizontal resistance lines, look for targets, blah, blah. But now we have the setups done so far. So when I have a setup and I know where to get in, where do I place my count protection order? Meaning, if price doesn't want to go my way and decides something else, and it's not going my way, I have to protect my account with what they unfortunately call stop loss. Sounds so bad. Okay? If I'm in here, this candle here, or whatever you like, they're all fine. First one would be best, of course. You want to place your count protection order or stop loss below your 0.3 on the 1 to 3 setup. And because you're waiting for retracement back to the 36, you want to place your stop below the 36 and not exactly 1 pip below the lowest point, but you give it a space of 10-15 pips. It doesn't really matter, just a little bit more. Because brokers, especially the retail brokers, are funny sometimes with widening spreads and kicking you out if the stop is too close, right? Now, you shouldn't calculate too much in pips. In this case, if you have a stop of 70 pips on this volatile pair, okay, what you want to do is calculate in percentage. Is it okay, the screen? Okay, so how do you calculate in percentage? It's very simple. Like if you have a 70 pips stop, or let's say 100 pips stop, round number. Okay, and you have an account of $1,000. Okay, 1% of 1,000. How much is that? Anybody? $10. Okay, what about 2%? Would be $20. Okay, so if you have a stop of 100 pips, you have to calculate and figure out how much percent it would be. And we don't want to expose our account to more to 2%. That means if you have a good setup and it just looks nice, but you're just starting out with trading, you don't want to risk 2% immediately. You want to go with 0.5%. But just for this example, to make it round number, let's say 1%. You want to risk 1% to expose your account to 1%. So you have to figure out how big the lot size should be so the 100 pips is not more than 1%. So you risk no more than $10, which would be micro lots. Okay? Get it? Okay, guys? Now you can you can Google and you find also indicators that calculate the risk for you. You can do it with a calculator if you want to, just to start with. Just keep it simple. Okay? So, just 1 second, guys. I don't see my. Do you see my mouse moving here? What now? What about now? Okay, great. Okay, okay. Yeah, I think it was a battery or something here. Okay. So yeah, you find a way to calculate. Don't think in pips. They can be poison and very confusing. You just calculate. You say my account size is 100%. So how much do I want to expose my account to? Especially when I start. 1% maximum. I would even go with 0.5% or less. Just to slowly grow an account to 5-10%, and then you can still risk more slowly. When you start making money from the markets, you feel better. And your mindset, especially, confidence, is much bigger when you start making money from the markets and you're not risking money from the investments, from the money you actually put in to make money, right? So yeah, 0.5% is already a lot. Is already a lot. You have always to earn the right to make money. You cannot just go and cowboy trading and do cowboy trading, right? You just need to really do it slow, take your time, grow the account, learn, get better. Okay, so this is money management basics for you. Money management basics. Now, another important thing is when you get in somewhere and you see here's my first crossover and the trend change on the higher time frame, this is a big 2 to 3 line or trend line. You ideally want the first setups after the crossover. When you get the second, third, fourth, fifth, you never know how far price will go before it's retracing and going against you. So every time you get in late, like not the first time, but the second, third, or fourth, the later you get in, the less you want to risk. Okay? So if you get in here, 0.2% maybe. Because on this time frame it's late. On a higher time frame maybe it's early, but on this time frame it's late. So when you do your top-down approach, you go from weekly because you want to see the break of the previous trend direction, right? Then you go to the daily. You want to see your first setups happen already. So if you didn't catch those one on this time frame or after this break on the first 1 or 4 hourly, 1, 2, 3, then you know that whatever you do here is late. So instead of not touching it, if it looks good and volatile, I taught you before how to figure that out, you trade, but you trade with less risk. Okay? Less risk. And then, when it's getting really late, like on this 4 hourly chart, and next resistance is here, 4 hourly want a retracement back to the 36. On the 1 hourly, you already have a retracement back to the 36. So could you trade this? There's no big retracement, unfortunately it's a range. So you have to wait for this to break. Yes, you could. On the 1 hourly you could do it, if it happens, to target the next area of resistance. So when I place my stop below 0.3 and I get in here and I have a stop of about 150, 120 pips like this, okay? And I risk to make 0.2%, for instance, okay? Where would my target be? I'm in here. I have a stop of 120 pips or 110 or whatever. Where would the target be? My target, if I have only one position, we usually don't have only one, but if we have only one position, is the next area of resistance coming from the higher time frame. In this case, would be this area, this whole area, not exactly at the line. Yeah, we have this whole area. So if I go there close to this line, it's 250 pips, and I would risk 110. So if I have, you want to write it down, a target of 2 times my stop, my account protection order, it's a good target and worth trading. If my resistance is too close and it's not at least 2 times the stop on average, then we want to avoid trading. Okay? If the stop is 100, target should be at least 180, 200. Okay? Now we are also splitting positions. We take incremental profits. One on one. We take a third out. We place actually 3 trades. We split one position into 3 parts, with other words. But you need to place 3 orders. So if you have to trade, let's say you can trade 3 standard lots or whatever, when you have done your calculations in risk, you would split the 3 standard lots in 1, 3 times 1. And what we would do, and because it's recorded so you don't have to remember it, with a 100 pip stop, we would go 1 to 1 with the first third, 2 to 1 with the second part, and we would leave the third part running because it might hit resistance, retrace only back to the 36, and continue up. So then we have a bonus lot running, and as long as the price creates 1 to 3s on the time frame you entered, you can just trail your stop, take your stop and trail for the remaining position, come on, below the next 1 to 3, and again below the next 1 to 3. So if you did enter, let's say on the 4-hourly chart here, you would be still in, stop here, trailing it to the next 1 to 3, after the next 1 to 3, trailing it to here, here, and here. And right now the trend line is the 36, right? The stop would be, the 1 to 3 didn't happen yet, but you would trail it below the 36 anyway. It would be here. That means if price decides, you went in here, right? You made your first lot out, you had a stop in this case of 120 pips, you made your 120, you made your 240 up here. The last lot would be running with about 340 pips still. And if price goes up, great. If not, and it would kick you out here, you would keep another 330 pips. So this is the basics of the Spartan system: how to get in, how to trail a stop, what to target, how to split a position, and how to get out. Okay, and money management. So it's all recorded. I don't want to analyze it more because it's getting too much. We are here almost 2.5 hours. Okay, and we still have stuff to do. This is only basics, and it needs exercise, it needs skills, it needs, a lot of little things, understanding, especially experience, and you'll figure it out. But it is very, very powerful when you get the hang of it and when you understand what you have to do. Okay, so it's recorded, so I don't have to repeat, and it would be too much for you. We still need to get into the part where we are talking about the mental trading, which is even more important than the technical part. In the beginning, the understanding of charts, how they move, what they do, all the stuff I explained to you, right, is 95% of everything in the beginning. When you get good at your analysis and your top-down approach and understanding, then it's for you just a habit to draw the lines and make everything looking fancy on the chart. And because it becomes a habit very fast, takes a couple of weeks, maybe a couple of months if you're new to it, okay? Then it's in your blood anyway, so you cannot lose it. Yeah, if you get good at this, you're good at it. And then what happens? It will be only your 5%. The technical part, which first was 95%, now becomes 5%. And everything else is really the mental part afterwards, which would be then 95%. Sounds fancy, huh? But that's how it is. It doesn't mean it's difficult or it's really, really, not possible, which it is, no problem. It really isn't. But you have to be able to conquer yourself. Yeah, to be able to control or guide is a better word, guide yourself. Okay, so I want to talk about this not now, but after another 10-minute break. Okay, so everything we did, the technical part, you won't be able to remember it, but after watching the video again and again, you'll see it's becoming easier and easier. Okay, so what we do we all agree on another 10-minute break before we go into the mental part? Okay, great. So another 10 minutes. See you in 10. Okay, so here we go. For many of you that are new to trading, this still doesn't mean much. Okay, it doesn't, because you don't have the experience yet. But for many, so let me ask you, how many of you have traded or are trading longer than 3 years and still don't have consistent results? Guys, it's no shame in that, right? People that trying for a long time, but they haven't given up yet, that means they want to do it, right? So as I said, for some it takes longer, for some it's faster. Now, if it's too many years, then something is wrong. Yeah, so, and you probably already know what it is. Okay, so who is trading less than a year? Less than a year. Anybody here? Okay, so those are the new guys. Okay. Less than a month. Okay, it's very, very new. Okay. So now, who has figured out already that when you trade, that you have to fight a lot with yourself in whatever terms? There we go. Isn't that funny that we can hide from ourselves almost all the time? We can put on a, what they say, how they call it, like a different mask, or try to sell stuff to somebody, or try to look like we are somebody else. If we want to, we go out somewhere, want to look foxy or something, yeah, oh, look at this guy, or look at this girl, right? But when it comes to trading, you cannot hide. Everything you do, good or bad, it will come out, it will be there right in front of your face. Doesn't matter how smart you are, how big, how small, if people like you, if they hate you, if you're a bad guy, if you're a good guy, doesn't matter. Everything gets out, right? Who has this experience already? Who had this experience already? Especially when you do live trading. Yeah, like there's this old saying, I don't know if you know that, they say like, it doesn't matter if you're a good or a bad person, if you jump off a high cliff, you die anyway. Yeah, it's the same with trading. It doesn't matter what you think you are, or what you want to be, or whatever. If you don't understand what you're doing, and you're not focused, and you're not there with passion, you will not make money. Okay? But if you do these things, if you are focused, and you have the passion, and you learn to have the confidence, and you start feeling good, like you start feeling positive more and more and longer every day, you will get the results without even looking for them. It's just part of it. Okay? It just comes with it, with trading. It's about the focus, about understanding, about feeling, and being really, really, really positive. Yeah, you cannot be, how can I say it, it's difficult. Like, English is not my first language, so it's sometimes I have trouble expressing these things. Really, it's not easy. You cannot be, pardon my French, you cannot be an ass and making good money all the time. Not possible. Okay? You really have to open up, see a few things. You can have an ego, but you have to be able to guide it and not let it out of control. Okay? You will pay for it immediately. The second you think you are somebody else, somebody better, bigger than anybody else, than everybody else, you get punished for it immediately, because the market doesn't know you, doesn't care what you do. If you risk too much because you think you are the guy or the girl or whatever, okay, it might work once or twice, third time you pay for it big time. And you want to make it back because the ego is there, and you just risk everything because, yeah, I can do it. And then the money is gone, and then you are zero, and if you have enough strength, you start over. And you do it again and again, and then until you are 100 years old. That's maybe a way to do gambling and have fun, or be pissed all the time, but it's not a way to grow your trading business. Okay? Yeah, you actually have to be a nice guy or girl. You have to be nice. You have to be. You have to want to be. You don't have to do anything, but you will feel when something is wrong with you. You'll feel it when you trade. And when you trade, you start realizing a lot of things that you probably didn't realize before, or you at least tried to forget. Okay? Many things will happen to you when you start trading with real money. Now, why does that happen when it's about money? I mean, you're doing so many things in your life. especially like when you're older, you have more experience, you have done so many things. But when it comes to trading, it doesn't matter how old you are at that point, you know. Things will out, and usually the bad little devils, yeah, that are in or around your head, flying around, or in your brain, or they will come out. They will tease you, trying to make you do things that you know are bad for you, but you do it anyway. Why? Because it's about money. Now, what is money? My question. What is money? Does anybody know? Took me a while to figure out. No, it's no. It's not nothing. Not at all. Don't just give me stuff that you have read somewhere. Just think about it yourself. What is money? Okay, some say it's emotions. Yeah, there we go. I have a good one here in between. Some say it's freedom. No, it's only freedom if you know how to use it. We had one guy saying it. Yeah. First of all, it is energy, right? It is energy. It's very, very powerful energy. But apart from energy, it's what? It's a tool, right? It's a tool. So when I ask people, and people call, or they want to join a course or program, and if I ask, what do you want? And they say, I want to make money. They want this energy. They want the tool, right? Okay. Why do you want to make money? I ask. So I ask you, why do you want to make money? You all want to make money, right? What do you want to do with the money? Can anybody give me a clear answer on that one? Security for the family. No. Don't take me wrong. Of course, everybody wants security for the family. But that's not really what you want to do with it. Freedom, okay? What are we after, everybody in life? What do we want? We don't know how long we are going to be here around here, right? On this planet or whatever. So, what are we looking for? There we go. We want freedom, yes, and we want happiness. Say we want to be happy. It's that simple. So, is happy something complicated? It's something really simple, right? So, who is happy? Now, is everybody happy? Not right now. Are you all happy in life? Everybody happy? Hello, guys. Really? Good stuff. I like your answers, guys. Yeah. Okay, now I'll give you that. If you are all happy, that means that you already know what you want. And you already do what you want. So is everybody doing what he really wants to do? Everybody? Not even close. Sometimes. No. Okay. So are you really happy then? Or almost really happy? There's a big difference. Big, big, big difference. Okay? So why do you want to trade? Okay, we all like the charts. We have to have this passion for trading, you know, it's adrenaline, it's really good stuff. I like it, and I always want it. Just feels good, you know, this whole thing around. But the result is you want to make the money, yeah, but not 100%. You're not really. If you're getting good at trading, you want the good setups. You want to get in because it feels good when market is actually going your way. And if you get good at this, it becomes a habit. Money is a byproduct. It's a secondary thing. It's just part of the whole thing. But what you really like is the whole thing about it. Not at the beginning. In the beginning, everybody wants money. Not everybody, most of them. Okay? But when you see what is important, what really matters, and what you are after, then in your mind, money is secondary, but it is a byproduct of your good trading. Sounds a little bit weird, I know. Took forever. It took me years to figure out, you know, how the whole thing works. Really, not what people write in books. In books, you read all kind of things, you know, and it's just fun to read the books, but not really. You don't really get a lot out of this. Yeah, you need your own experience and try to figure it out. So we want the tool, we want the money to do something. And what we want to do is what makes us happy. So what does make us happy? Everybody has different things that, you know. And now if I start asking you what makes you happy, what will happen? I won't get many answers, so I don't even have to ask, because many people don't know what they want yet. They're still trying to figure it out. Okay? And it all starts there. I mean, when we start talking about this, it will take forever, but I just try to hit some points here so you can start thinking about it. When we grow up, when we go to school, right? Before we go to school, when you're a kid, you know, and everything is great, and you do new things, and everything is new, and you just do things out without thinking, saying stuff without thinking, and everybody, the big guys around you, the adults are all laughing because you are yourself, and this is so funny. But when you get older, then it's not nice to do that anymore. You have to be polite, don't talk like this, don't put your spoon on the whatever displays, don't, you know, make your clothes dirty, be good at school. So what happens? You get in a system. Okay? Don't run around naked in the house. Yeah, exactly. Yeah. But you get the point, right? So what happens? What happens? We follow rules because black and white, this is good, this is bad, don't do this, do this. Somebody tells us, usually the parents, teachers in school, because that's how society works and stuff like this. Okay, we all go through that, or did go through this, right? But what happens when we are small kids? Okay, we just sometimes believe stuff, you know, blindly. Daddy says so, that's it, you know, or mommy says so, so that's the rules. And when we get used to this, what others say is right. After years, when we grow up, we continue doing this. I mean, I never did that, so I got lucky, I guess. But many people do this. They just think that's the way it has been, or it must be. Why? Because the system says so. The government says so. This is bad, this is good. become, I don't know, study, do this. So what happens? I'm not saying it's bad, guys. You know, if you wanted to study, I don't know, whatever, chemistry, great stuff. If you want to be a lawyer, good for you, if that's what you wanted. Okay, but often, most of the times, we get into a job that we do just because we don't know what else to do, or there was not an opening to do this, so I'll do that. And what we said in the beginning, right? So if you become a doctor but you didn't really want to become one, then you are not going to be a great doctor. Okay? And many people that start trading are people that actually don't like the way or their job or the way they live. There's something wrong they just don't like. Okay? And they want to do something, they want to make some changes in their life, and why not doing it from home, for instance? Or having more freedom. But why do we want more freedom? Because we want to do things we like. So what do we need? We need the tool. The tool is money. So it's like it's round and round all the time. Yeah, so we're starting again from scratch. So it's all connected. We cannot solve it right now. I'll just give you, as I said, a few things here and there, because otherwise I'm going to talk until tomorrow morning and we're still not ready. Yeah. Bottom line. Let's stop here. It's too much. We want to be happy. We want to find a way to have more time to do what we really like. Spend time with friends, I don't know, go out with family, traveling, so you need the tool. The tool is the money. In order to get it, if you want to do it with trading, then you need to be good at trading. Just knowing that you want out or want to do something else or want to add trading to whatever you're doing as an extra thing, no problem. Okay, you can do it, but you have to do it 100%. You cannot just do it a little bit. You do it or you don't. There's nothing in between. If you do it long term, you focus, it will work, you will make money. If you do it a little bit, you won't. You will lose money. Okay? So first thing we need to remember is that we really want something. Okay? You need to have your goals, your targets. You need to create a trading plan if you want to do it with trading, with Forex especially. You have to learn how things work. You have to get good at it. You have to be able to guide your emotions, not freaking out. You need to understand what is important. And if you have your goals in front of your face and you say, look, I want this because I want my freedom, I want my happiness. If you think about that all the time, you won't do all those crazy mistakes most of us did. Okay, you will do them, but you will do them in a way that you can save whatever you have done wrong. And you learn from the mistakes and you go on. If you don't know what you really want, if you don't have any goals, if you don't have any plans, and you just do it because you want some money, but you don't even know why you want the money for, to just show off or something, what will happen? You will lose it very fast. The markets don't respect anybody that's gambling. They don't tolerate this stuff at all. So you get in, you lose, give the money away, which is great for me and some other guys. So what you lose, I'll make. Long term. Okay? That's how the thing works. It doesn't matter if we like it or not, it's how it works. And that's why the charts always look like that. They do always the same patterns, because people do the same great things, but also the same stupid things. Again and again and again and again. Okay? So you have to start understanding mentally what's going on, like what do you want? Okay, and when you figure out what you want and how you want to achieve it with trading, You want to remember that you are in charge. You are the boss. Some people are used to be employees, working for somebody else for almost ever. Now you want to do it on your own. Okay? So you are the boss. But what happens very often when people start trading, have the confidence in the beginning, market behavior is changing. Maybe they don't have the experience or they don't feel like trading or whatever, or do some mistakes. What happens? They get a few, let's say, slaps on the face from the markets. They lose a couple of times. And what happens? They put their, tails between the legs, head down, and say, "Oh, maybe it's not for me. Yeah, maybe no. I'm just the guy that usually does what everybody else says. Yeah, because you are used to it. It became a habit to just do what others say. Okay. So what happens at that point? You either do what I just said before, head down and do something else or stop. Or the other bad thing, which is probably worse, you start blaming others. Who told me to do this? Look at this. This doesn't work. The stupid broker. The bloody system. This and that. So what happens when we start blaming others? What you're not doing at that point is you don't take any responsibility for nothing. So you are not worth making any money anyway. Sounds bad, but that's how it is. You will not make money if you start blaming others. Never, ever. It's not working like this. Okay? I mean, it sounds convenient for others to say, "Hey, take responsibility." Then you're off the hook. But it really is like that. Okay? Everything you do is your responsibility, but it's great because you are in charge. You are the boss. You don't have a boss. The only boss you have is the market, and that's the greatest boss ever because it never tells you what to do. Usually a boss is telling you all the time what to do. And if you follow your own stuff and you start understanding how the markets work, you get a reward. You start making money. And sometimes you don't. And if you don't make the money, and you give something bad, it's just part of the game and you have to accept it, and you don't have to like it. Nobody, I'm saying it all the time, you don't have to like losing. Nobody likes to lose, but you can accept it. So what you do, you manage, this is part 2, your fear of loss. Yeah, nobody wants to lose, but it's part of trading that sometimes you win and sometimes you give something back. Loss is a better word. Doesn't really apply. Okay? So, what do you do, guys? How do you manage fear? What would you do to manage this? Any ideas? You have every time when you lose a trade, who remembers what we usually do? How do we think about that? What do you do, guys? You turn a bad thought into something good, right? So, when I'll trade, I lose a trade. Okay? So what I say, okay, great. what is the markets? What is it? It's a big buffet, right? A big place where we make money long term. So in between we give something back. So this is my personal thing. I told people a million times, okay? What I'll do, I'll say, okay, when I give something back, when I lose a trade, that's not really loss. It's just saying thank you to the markets that I'm allowed to trade. So now I'm giving something back to the markets. It's like we eat in a good restaurant. We like the food. We give a good tip. Okay, so everybody's happy. The waiter's happy. You are happy. And you can continue eating there. Okay, that's how I think about when I take a loss. It doesn't mean that you have to like it, but you have to accept it. So what you do, something that isn't nice for you, in this case losing some money, you say, okay, I have my money management rules. It cannot do me any bad. It cannot, there's no disaster if I lose a few trades with money management. So what do? I take that bad thought that I have and turn it into something good. It's not difficult. You just use your own one. The restaurant thing is mine because I like going out eating. Okay? But you can use your own whatever. So those little examples, this is only one. You start thinking like that and things will change. You will start seeing things differently. Okay? Okay so far? Because really that's what it is. If you have good money management, you know you have a system that works. So how many times will I win out of 10, 6, 7, 8 if I'm getting lucky? But I always make more than I lose on average anyway. So I end up making money long term anyway. No problem. Okay. Now, one last thing, because as I said, we can talk forever here on these topics. Positive thinking exercise. This exercise is not mine. I don't even remember where I got it from, but it's a really good one. Every time, you probably know it, or some of you know it. How many thoughts we have every day? Thousands, right? Thousands. But if something is really bothering us, it can be like this domino effect. You think one bad thing and then another comes and another one and you start feeling like shit very, very fast. So when you get a really bad thought, what you want to do is on a piece of paper, write down 5 things that you absolutely love to do. Whatever it is, up to you. Okay, what you really like, or people you really like, or something, a face you really like. Okay, maybe your kids or whatever, boyfriend, girlfriend, or whatever. Things are 5 things. Okay, and every time you think something really bad, you turn it around and think about one of those things. Yeah, but try to keep it. You cannot have this bad thought longer than 5-6 seconds. You have to exchange it immediately. Okay, guys? Okay, just try to do those 3 exercises. Yeah, I mean, easy for me to say. It takes time, but it's very important. You manage your personal fears. Everybody has different issues, and you just have to figure out what your issue is, and then it makes it really easier when it comes to trading. Because what happens when you have all these bad thoughts and you try to trade and then you get the loss, it's just this little extra thing, the loss, that will make you explode sometimes. Okay, and you don't want that to happen. really, uh, um, really no need for that. Yeah. Okay, guys. So far, that's what I have to share with you today, at least. Now, if you need more help or you want to join one of our programs or whatever, you have some questions, just send us emails. Okay, send us emails because now over Christmas for a couple of days I'm going to be away, but we always see our emails. My partner Jeff is also here, and our team is always there for you. So whatever you need, just let us know. But before I finish, and before we switch over to Jeff, I want to wish you a really merry and happy Christmas for the guys that are actually celebrating this. Not everybody does, but for everybody that does, I hope you have a great time and have fun. And maybe your plans and wishes for 2017, I hope you can focus on those and they come all true. Just, do your thing and it will happen, I'm sure. So again, as I said, it's all recorded, no problem. And we are not finished yet. I will switch over to Jeff. So Jeff, do you want to take another break or should we continue immediately? Hey, thank you guys. Thank you very much. Continue. Okay, thank you much. Thank you very much, guys. Yeah, same to you. So I hope you liked it so far. We are not finished yet. Hey, thank you very much. Yes, exactly. Yeah, great pip hunting 2017. There we go. Yeah. Sorry, guys. We do it another time with the bazooki. I don't have it here right now. Καλά Χριστούγεννα, Spiro. You're funny, guys. What do you prefer is the question, Haikinashi or Renko? It really depends what you want to do. Haikinashi is my classic strategy, which I use every day. The Renko I use mostly personally for day trading only, as some scalping when I'm in the mood. My plan is a little bit different. Everybody has a different trading plan, right? So they're both great, but you need still to understand and see the markets first. Hey guys, you're welcome. Thank you for the great feedback. Great Christmas spirit here. Yeah, guys, whatever you want, you can contact us anytime, whatever program, whatever you want. Yeah, just let us know. No worries. Okay, I'll switch over to Jeff now, guys.
Okay, good stuff. Let me see if I can get my PowerPoint up here. Okay, can everybody see my screen? Okay, good. Okay, so I know this is going on a lot longer than Nick and I had anticipated, but the reality of what we're sharing with you today is it's just impossible to do in one shot. It would take days. We could spend literally a week on just the mental aspects of what, because it's that important. So what I'm going to try to do is just give you like one important concept to take away. So I'm going to try to wrap it up in about 20 minutes or so because I know this is running long. And one thing I have to say is Nick's a hard act to follow because he's already covered a lot of the things that I was going to share with you. But the good thing is, both Nick and I have very different experience levels, and we come to this from a different point of view, so we can both share our take on a particular topic. Okay, now we already talked about this a little bit, but once again, Nick's made it very clear that there's a trading strategy that you have to really master, but after that, that's only a small part of it, okay? It's actually just about 5%. And then the mindset is everything. So really what I'm going to talk today about is the mindset. And now here's the thing, and I can tell you this after trading for more than 20 years. You can take a trader who has consistent mental control and consistent trading skills, and he can make money with a pretty crappy system or just a mediocre system, okay? But you can take a trader who, if they don't have the discipline of both their mental state and their trade management, they can lose money with the best strategy in the world. Does that make sense? Yeah, I've seen it, guys, happen over and over again. It's just like the mental part is everything. And it's why, like, you think about it, if you're watching something like one of the sports in the Olympics, the athletes can be very equally trained, but in the end, it might be the one that wins just because their state of mind is that much better, okay? So what I want to share with you, this is a quote I've heard, but it's, when you get the big idea, all else follows. And so I want to just focus on one idea that you can take away and just kind of use that throughout the week and through 2017. And I also want to point out that I know that we have a lot of new people to Spartan Academy on this call, and then also quite a few of you have also heard me talk and sat in a lot of Nick's talks as well. But I'm going to gear this more to those of you who are new to us, but also keep in mind that even if you've heard me give the same talk or variation of it, it's worth repeating because this is the foundation for everything. And just a quick synopsis for those who don't know me, okay, other than you might know that I'm Nick's partner here. Over 20 years ago, I walked away from a six-figure-a-year salary as a chiropractor because I had received a brochure in the mail, and it told me I could make a fortune trading things called currencies and futures. Had no idea what they are, but it sounded pretty enticing, okay? Especially because I was tired of working 6 days a week, like 14, 16-hour days. So they sent me this brochure in the mail, and it looked so easy. They'd show these charts, and they'd mark off like, oh, you just buy here and sell here, and then you'd make $3,000 buying cattle futures, and then you'd make another $1,200 buying and selling soybeans. So I literally thought I found the ATM machine. It seemed like, I was going to get rich quick. Can anybody identify with this? And let's be honest, how many of you, when you heard about Forex trading, you thought you could get rich quick? At least, it's very enticing. We all fall for it. Okay, and as Nick's already talked about, it's the realities. Trading, it takes effort and time. There's just no way around it, okay? So to make a long story short, I literally walked away from my career because I thought that I was going to make a lot more money, a lot more quickly trading versus just kind of, slogging away in my office 6 days a week. But the problem was that, I did like a lot of you have probably already done. You bought many courses, spent tons of money on it. But basically after 5 years, I could barely break even on a regular basis. Okay, maybe I wasn't a fast learner or something like that, but I would occasionally get on a hot streak and make a bunch of money, but then I would give it all back. And I think from some of the comments earlier, some of you have done that. You kind of start going good and then you give it all back. Anybody sound familiar? – Dorothy, okay, yeah. It's actually part of it goes with the program, everybody. In other words, it's part of the learning curve, and most people go through this type of thing. Okay, so once again, I don't have a lot of time to go into details, but it caused me to lose a six-figure income. Okay, something that was very steady for me. I ended up losing a lot of, like, tens of thousands of dollars buying programs. I also blew out a trading account as well, and it almost kind of paid the ultimate price. Was it cost me my marriage, because my wife just got tired of me always saying, okay, I'm going to finally pull this thing together one day, and she kept waiting and waiting for me to kind of make good on my promise, and I just didn't do it. So anyway, how does this help you? I put in the time over 20 years. I've spent thousands of years studying the charts, patterns, and so forth. And so what it allows me to do is very quickly tell you what works and what doesn't work, and more importantly, why. And the reason this will help you is because it's kind of like I can give you a cheat sheet. Okay, as I said it a minute ago, trading isn't easy to learn, but what Nick and I can do is give you a lot of the shortcuts that are going to certainly, cut down your learning curve. So in the late 1990s, I finally figured out a system. It was very simple that would work for me, and I started making money with that. And people asked me to start sharing it with them, and I created a small ebook. Okay, and it was like a 97-page ebook, and there was a couple hours of videos, and I sold it for the kind of the princely sum of $97 back then. Okay, and thousands of traders purchased it and they studied it. And one thing led to another, and I started coaching people, and I also started consulting with financial firms to train some of their traders on their trading desks. So once again, what I'm going to share with you, it's going to help take some of the struggle out of this for you. Okay, just make life a little bit easier. Okay, so what I want to do is I want to let you in on the big trading secret, and I know Nick's already talked about this a little bit, but simplicity beats complicated every time. And it's not the system, it's what's most important is it's the proper application of the system. Okay, now as somebody very smart said, called Voltaire, they said common sense isn't so common, all right? And this is even more so because when we're trading, our emotions come into play and it overrides common sense. Okay, so over the past 20 years, I've had the privilege of meeting a lot of traders that were very successful, and some of them made 6 and 7 figures a year. And the thing they all had in common was it's something that you wouldn't think about, is that their systems are very simple. You'd probably think, okay, if a guy was making $3, $4, or $5 million a year, they would have something very complicated or very complicated software. But the exact opposite was true. Now, this is really interesting. I met a trader back in the mid 1990s, and he had told me, I met him at a trading seminar, and he told me that he's making a couple $1,000s a day trading the S&P futures markets. And keep in mind, this guy wasn't selling a program or anything like that, so he had no reason to tell me this with any ulterior motive. So he invited me to spend a week with him in Kansas, and he said, hey, Jeff, you can sit at my desk, you can watch, I'm going to tell you what I'm doing. You can, once you're comfortable with it, you can piggyback off of my trades and you can make some money while you're learning. So I was really excited. I thought finally I was going to get the kind of the secret sauce to the way to make money. So I got out there all excited. I'm sitting next to him, and he would take a trade. He'd make the money. And then he'd say, okay, you want to jump in the next one? I said, no, I'll just wait a few more, okay? So basically, every time he would take a new trade, and keep in mind he was a day trader, so he was trading quite frequently, I'd always say, no, Don, I'm going to wait a little bit longer. I want to keep watching. I'm going to keep watching. So what ended up happening is, by the end of the day, I didn't take a trade. He made his $1,500, $1,800. The next day, he says, okay, you got to start jumping in. So to make a long story short, basically what happened was every time he would take a trade, I would always find an excuse. I'd always say, hey, Don, well, didn't you think about this? Didn't you think about you were hitting overhead resistance? Didn't you think you were at a Fibonacci level? So I always found a reason not to get the trade, yet he would just kind of laugh at me and he would jump in and make more money. So flash forward at the end of the week, he was up like $10,000. Okay, and keep in mind he was trading some size in his account. But I didn't take one trade, and I always had an excuse. And what the kicker was that here I was, not a consistently profitable trader, and I was telling him that, hey, Don, maybe you could, add this indicator or this little chart pattern, and you could do even better. So I kind of had the very naive thinking that I knew better than him, and so I walked away with kind of the holy grail on a silver platter, and I still couldn't make it work. So once again, I was the village idiot, okay? Somebody handed something to me, they weren't asking me to pay for it, and I still couldn't make it work because I was full of excuses. Okay, George, you can identify with that. Yeah. And the reason I bring this up is because as traders, we're full of excuses. And as Nick talked about, I forget who it was, that we all want to be right. Our egos don't like to be wrong, especially if you purchased a lot of expensive programs. Maybe you've been studying for hundreds of hours, and you just don't want to be wrong. So you're always worried about what's going to happen next. All right, and so you get gun shy. You just can't take a trade. All right, there's just so much riding on being right. Okay, now this is the interesting thing, and it ties in with what I said a minute ago about simplicity. So I just want to talk about our good friend Nikos here in the Spartan system. So last year, as some of you know, we did a live event at his home in Sparta, Greece, and I got a chance to spend 12 days with him. And while we weren't teaching, or I should say the week before we actually did the live event, I was watching Nick do his live trading. Now keep in mind that he manages money for clients in Europe, and so it's his responsibility to safely, make money for them. So I sat next to him and I watched him do his analysis. And now this was the funny thing about it was that he looked like he was exerting as much effort as when I had previously watched him in the room next door. He was sitting with his kids and they were watching some funny cartoons. Okay, the kids are laughing, Nick's just smiling off to the side. Okay, well, obviously he was just having a good time. Well, this was the same amount of mental intensity that he was applying while he was trading. There was no worry, no concern, no sweat coming off his brow. Okay, this is the exact opposite when you see a lot of traders. They're just really kind of got themselves tied up in knots. So, once again, he was using a very simple system, and he's using the exact same system he was showing you guys, the top-down approach, going the monthly, weekly, daily, and that's all he's doing. Okay, nothing fancy. There was no other things that he's kind of holding back from you guys. The foundation of his money management was very simple. And bottom line is, he's been able to build an amazing lifestyle for himself. So, what's Nick's secret? It's just like the other trader I mentioned, named Don in Kansas. Nick's secret is that he is a consistent application of a simple strategy over and over again. And this will trump everything. Okay, if you can get this down, then you've really got the tools to get the lifestyle that you want. Everybody seen the movie Forrest Gump? I can't remember when it came out. It has to be at least 10, 15 years ago. Has everybody seen Forrest Gump? Okay, yeah, I think most of you. Well, the bottom line, he was a very simple guy intellectually, but he was actually a genius because he knew that if he kept things simple, life would be good. And this guy ended up building a big business almost by accident, just by keeping his life very simple. So you've all heard the saying, keep it simple, stupid. And this is what it's all about. It's not the fancy systems. Now, this is one of the things I really want to kind of hit home here, is that when you keep it simple, you'll avoid what's called the Holy Grail syndrome. Does anybody know what this is? The Holy Grail syndrome? Yeah, Antoine. Yeah, the circle of doom. Yep, jumping from system to system. Yep. Okay, somebody, Savine said there is no Holy Grail. Keep looking for the best system. Yeah. See, here's the thing. It's very tempting. There's always like some new shiny object out there, something that sounds better, easier, faster. But this is what's called the Holy Grail system. And basically, the Holy Grail, at least in my opinion, is we're trying to find that system that we basically almost never have losses, or they're just so small, they're insignificant. Okay. But I can tell you, after spending well over $50,000 and having friends that have spent way more than that, even if you could spend $1 million and buy every piece of trading software, you're not going to find the perfect system. It just doesn't exist. And here's the interesting thing. Once you truly understand that, you can get off this sort of the end of always chasing something newer and just focus on one thing. And back when I started trading, this was actually before there was most people had internet. And basically, if you wanted to trade, you had to lease what was called a trading terminal. It was $350 a month, and it only had 5 indicators. Can you imagine? And back then, it was only like there was a black screen and the indicators are green. That's all the options you had. Now, flash forward to today, you can download a piece of software like MetaTrader, and it's got God knows how many indicators built in, and you can also find hundreds, if not thousands, that you can install from online forums for free. But here's the deal about that. Despite all these amazing indicators and software and EAs, the amount of winning traders hasn't increased at all. In other words, back when I got into trading, it was less than 10% of people made a living doing it, and it's still the same way. So if technology was the answer, or having the right indicator or EA, then surely the winning percentage might at least bump up to 20, 30%. Just a quick question before I move on. Have a lot of you been under that impression, maybe when you were newer, where you were assuming that if you could find the right EA or something like that, or the right indicator settings, that would really make the difference? Yeah. Once again, I think everybody would say yes. I can't tell you how long I spent looking for the perfect settings. But once again, it doesn't matter. And somebody asked before why Nick uses the 12 EMA versus, say, the 14. It's just from experience, okay? Just from like thousands of hours of observation of seeing what the price does at certain moving averages. But the reality is, it wouldn't matter if we used the 12 period or 13 or 14. If you apply the same system step by step, okay, in a very logical format, use the proper management, you could still do just as well. Okay, so there's no kind of like voodoo or magic just because there's somebody using a 12 or 13 EMA. So once again, it's, you can't buy your way. Doesn't matter how much you spend or how fancy things are. It's technology. It's not the solution. All right. And I had somebody call me the other day. They wanted to know what kind of trading computer they should use because they were thinking that maybe if they had the latest fast computer that would make a difference. But it truly doesn't matter. Okay. You can use, like nowadays, like a laptop that costs $200, something like that. It's all you need. Okay, so this is a really important thing to understand, that when you truly understand that there's no holy grail, it allows you to focus on making one thing work. And as I said a minute ago, that's why Nick is so successful. He does that one thing over and over again. All he does is keep applying the basic Spartan strategy. Now I want to talk about a trader. I used to call him my Tiger Woods. Now, keep in mind that Tiger Woods has kind of fallen from grace, but Sanjay was kind of my top student, all right? And he purchased my program way back in like 2004. And I got this call one day on Skype, and he says, you don't know me, but I bought your program like a year ago. And he said, I started with 1,000 pounds, British pounds, and I turned it into 112,000 pounds in less than a year. And my kind of jaw dropped because I had traders doing really well, but nothing like this. So I really wanted to know what this guy was doing, and I was so curious. I literally flew from the New York area of the United States, and I flew to London to spend a week with him at his home. Okay, and I interviewed him because I wanted to know what he was doing that was so different. So what I learned is that first thing he did was he had read my manual and watched all the videos 30 times, and he kept going through them over and over again. All right. So he said all I did was I kept reviewing it, kept going back to the basics. And so he used complete discipline, and he consistently followed what I taught him to a T. All right. And that gave him those amazing results. Now, here's the interesting thing about it is during that same time that he had bought my program, and keep in mind back then it was like the big price of $97. People email me to say, your system sucks, it doesn't work. What kind of stuff are you trying to sell me? So the thing was, why is it that it was the same system all these traders were using? So one trader like Sanjay absolutely crushed it, and another couldn't make it work. And it comes back to mindset, and I can't say this enough. This applies to everything we do in life. You can either focus on making something work, or you can focus on why it's probably not going to work. Does that make sense, everyone? Really think about that. And it's interesting because Nick and I get calls from people all the time, want to know about our programs and stuff like that. And you can immediately tell whether they're going to succeed or not by whether they are focusing on making something work, or they're trying to find kind of the hole in something. Before they start, they're trying to find out why things might not work. Okay, not a good way to start when you're learning something new. So really, just going back here for a second, the simple shift from one type of thinking to the other, it will totally change your life for the good or the bad. Okay, it becomes a self-fulfilling prophecy. And this, I can't stress it enough. Please think about this. The bottom line is you can look for problems or solutions. And you have to have a mindset that says, no matter what, I will make this work. And this literally can be the shift that will give you abundance in your life, or a life of poverty and lack and not having what you really want, wondering why things never quite work out. Does everybody agree with that way of thinking, that you really need to be, you have to make this work? And what I ask you to do is, and this is sort of like, I had to do this for myself in many areas of my life, but I realized in some parts I was more of being more pessimistic. In other words, I was always looking for the problem, like, as they say, the fly in the ointment. Okay. But it wasn't until I started becoming solution orientated that I started to turn that area of my life around. Okay. So, and keep in mind, I talked about when I went to see my friend Don, I was a problem seeker. Okay. Because the fact is, when Don would say, hey, you should just jump in, I would always come back with a reply, hey, Don, but. So anytime you make a statement that ends with but, you're probably somebody that's focusing on the problems versus the solutions. So you really need to do a little soul searching and ask yourself, what type of personality are you? Makes sense, everybody? Klaus, you asked if I'm just talking about you, huh? Yeah, we got your number there. And you'll find that when you read biographies of famous people, it seems like they're wired very differently. They're usually, no matter how tough things get, their mind is always focusing on a solution versus the problems. Okay, it's that subtle shift that puts them in that top 1% versus being with everybody down below. Okay, now, like anything in life, there's no free lunch and there's always a catch. So even if you would say to yourself, you know what, I am a positive solution minded person, your faith is going to be tested when you get, like, let's say 3 losses in a row, or maybe you experience a 50% win ratio. Okay, so what's going to happen is your confidence in your system, or maybe yourself, is going to be severely tested. Does this make sense? Does anybody experience this, where everything's kind of going good, you think, okay, finally you're going to make it, and then this happens, you get a bunch of losses in a row? Yeah. And the thing to understand, guys, is that if this happens, it's going to, once again, it's going to test your faith, and it's going to make you want to start chasing the Holy Grail. You're going to start thinking, oh, maybe this wasn't as good as the guy selling it said. Maybe I need to add some more indicators. Maybe I need to change the rules. But it's gonna put you on that merry-go-round. You'll never get anywhere. And Nick talked about, he said that he doesn't like to lose, but yet he gets losses. But it's just, think about it. He said that it was just sort of the cost of doing business, or he had to pay the restaurant for the privilege of eating there. And this is the way you have to look at it. If you get 3 losses in a row, it's just part of the game. And keep in mind that, like, say you have a 70% winning system, nothing says that you can't get, like, well, you don't know when the losses are going to come. You could get, like, them spread out, or you might just get the first 3 trades out of the gate might be 3 losses. So you have to just accept that they're going to happen whenever. Okay. And this is something very important too, is that, you've all heard the saying, if it was easy, everybody would be doing it. And if you just kind of read this little picture for a minute, these are once again comments that come from people who are focusing on the problems. I can't do it. It's difficult. Joe, or Betty, they're so much better than I am. I don't have the energy. I don't have the skills. but those aren't going to help you make it. So you need to kind of do a little bit of a mental check, and there's many exercises and ways to deal with this, but it's beyond the scope of the time we have today. But if you find yourself making excuses why you can't make this work, you've got to really dig deep and think about the way you're wired. Okay, son. Yeah, you said for me it's more like I make a bad trade, so back to the drawing board. Then you said watch the trading again and again and again. Okay. One thing I want to point out is it depends on what you mean by that. In other words, if going back to the drawing board means buying another system, that's not good. But let's say you realize you go back to the drawing board, it could be simply that you realize, okay, you've got to just keep reviewing the material again and again. Is that what you mean, son? Okay, good. There's arguably one of the best basketball players of all time, Michael Jordan, right? He credited his long-term success because he said when he starts every season, he starts completely fresh. He goes back to the most basics of skills. Okay, even being a world champion many times, he always go back to the basics, and that's what you have to do with trading. Don't always start fresh, always keep reviewing things. And going back to my friend Sanjay, that's why he was so good. He kept going back to the basics over and over again, and he just kept applying those. How many of you have heard of this book? It's called Trading in the Zone by Mark Douglas. Ray, you've heard of it? Okay. Yes? Okay. Guys, if you don't own this book, buy it now. Like, buy it yesterday. Okay. This is considered like the Bible of the psychology of trading. I believe Mark Douglas passed away, I don't know, in the last year or two, but this is the best book in the market for trading. It's probably, I don't know, $20, $30, $40 on something like Amazon. But this is the kind of thing you want to be reviewing monthly. Okay, it can make such a difference in making a living trading and not, because he goes into such great detail and clarity about getting a handle on the mental aspects of trading. And I believe he's got another book too. It's called The Disciplined Trader. He might have a few, but anything he's got is worth reading. Yeah, this should be the #1 trading book. I mean, people don't seem to read trading books as much now because everything's on the internet, but this is a must read. Okay, now here's the thing, guys. I was hoping to spend more time talking tonight, but we've already gone like 4 hours and 15 minutes, and I was supposed to be at my sister's for her birthday party like 15 minutes ago, so I'm a little pressed for time. But the big takeaway here is that I just wanted you to think about two things. Once again, it was you got to focus on one thing. Do it over and over again. If you decide you want to use a Spartan system, just keep drilling down on that, applying the same strategies, and it'll pay off. Okay. Then the second thing is avoid going on that holy grail buying spree. Just focus on that one thing and make it work no matter what. That's all it takes. It's just discipline and perseverance over and over again. And the thing that I wanted to talk about tonight, but I don't have the time, is really teaching you how to get over the, getting emotions out of the way. So the fear and the greed don't destroy all your hard work and studies. But just, Ralph, yeah, I use the Spartan system, but because I'm trading 20 years, I have my own variations. But when you've been trading a long time, you kind of realize that the market only does so many things. In other words, it moves up, down, and sideways. It moves in like 1, 2, 3 patterns. It breaks out. It goes into congestion. So I kind of got all these patterns in my head so that many times they're just going to overlap with the the standard Spartan strategy. Any question, guys, before I go? And once again, it's like I'm just scratching the surface here. Literally, I could spend a week because the mental part is so important, and I would really like to do it more justice. But Nikos and I were trying to cram as much as possible into like 3 hours or something. And like I said, we're already at 4 hours and 15 minutes. Okay, guys, you're welcome. And this video will probably be posted tomorrow because when these videos are recorded, the longer they get, the longer it takes to do the kind of the little magic to upload them to our servers. So look out for an email tomorrow, and then I'll send you the link for them. And if you need anything, just give Nikos or myself, a call on Skype or on an email. You're welcome, guys. And I apologize for the little technical hiccup there. It's just one of those things. Lee, my Skype is Dr. Jeff 007. Okay, guys, I'm glad you liked it. I hope you just had some great stuff that you can take away for 2017. George, that sounds great. You're welcome, guys. Happy holidays to all of you. Okay, guys, cheers. Thank you.